related to international income. If we take a look at the Brazilian CFC rule, for instance, it's so broad, it covers many levels of shareholding. So in order to balance this approach, Brazil grants foreign tax credit for anything possible. We say dividends here, but it's actually profits, right? Because dividends normally are taxed ahead as profits. But for everything else that you can think of, Brazil grants a very general rule for foreign tax credit, and it does not contain restrictions that we see nowadays in some countries, as we will see in the case of Germany. Silvia will explain that to us.
Yes, thank you. And from the German side, as you can see, in case of dividend payments from a Brazilian company to the German company, there would be actually a 95% effective tax exemption in Germany. So there is, of course, some legal requirements for this. For example, the participation of 10% for corporate income tax or 15% for trade tax purposes. And there would be no credit against the remaining 5%. But effectively, so 95% tax exemption. Whereas for their interest and royalty payments, we would have this income being taxed in Germany with a tax credit against German corporate income tax. And finally, a very important issue from the Brazilian perspective, the taxation of services. And the payment for services would be taxable in Germany, and there would be no foreign tax credit for this. And the reason is basically due to the fact that a foreign tax credit from a German perspective will be available only for the legally defined foreign source income. So you need to have this type of income in order to have the possibility of a tax credit. And the services, they could be foreign source income if there would be a permanent establishment or a permanent representative in Brazil. But well, in practice, there will be no foreign tax credit. There is, however, a possibility of a deduction as business expense of the tax paid in Brazil. It is, of course, not the same as a tax credit, as it would reduce the tax base, but it would be at least a possibility of considering somehow the taxes paid in Brazil. So those were from my side the main considerations that I wanted to share with you. Victor, would you still like to add anything?
Yeah. This I would like to highlight this point. This year, 2022, Brazilian companies are facing a similar problem from the United States because of a new interpretation or actually, a definition of source for services and royalties. Payments made by Brazilian companies to U.S. companies are no longer receiving a foreign tax credit in the United States. So what we see here in Germany is very similar, because the concept of, we like to think that unilateral measures would always help in avoiding double taxation, but the example of services here is a quite clear one, that Germany created a concept of source that doesn't help companies in Brazil qualifying. In order to have a tax credit in Germany for services, the services should be either provided in Brazil, a German person should come here, or have a physical presence here. Otherwise, we won't have credit, and this will only increase the cost for Brazilian companies. It calls for a new double tax treaty between Brazil and Germany, between Brazil and the United States, as I was saying. So unilateral measures are no longer helping.
The individual companies, they are still separate companies from a legal perspective. So of course, if you have a tax authority that needs to contact any of these companies, they will contact the sole company as well, the sole company directly. But we have, of course, this profits and losses compensation. So at the end of the day, there will be this compensation at a group level, but the individual companies will still be considered. This tax authority would not contact only the controlling parent, but rather the company's the controlled company, which is still for legal purpose an entity for itself. I don't know if this was the question, but are there any other questions?
I get another one, which is I think Javier Lacorte, whether the municipal service tax, the Brazilian municipal service tax, which also, depending on the municipality, is a type of withholding. Take the municipality of São Paulo, for instance, which are 5% for most services provided by a German company. Would that qualify for a foreign tax credit? Or I could even broaden the question by saying, would the CD, would the contribution for intervention in the economic domain, or any other tax, but especially the ISS, because where the Brazilian service taker is acting as where the taxpayer is the German company, let's say, would that be possible? I know that to start with, if this service was not provided in Brazil, there is no foreign tax credit. But let's say the German company provided services in Brazil, and there was a municipal service tax. Would that?
Well, you mean in the rare case that we would have a permanent establishment or a representative in Brazil? So I think we're really talking about something theoretical here. But if this would be the case, the German tax credit is in principle open to not only federal taxes but also to municipal taxes. So it could be considerate, but in practice, as we mentioned before, the provision of services is really a case where we would rather have a deduction and not a tax credit, as this in a concrete case that having a PE in Brazil or a representative providing the service, receiving the payment for the services, is something that well, at least I've never seen. So we would stick to the deduction, but in principle, yes, the tax credit is possible not only for federal but also for municipal taxes.
Yeah, and there's an interesting note from Professor Gerrit when we were comparing the tax burden. It's also important to go a bit further and also check on the tax rates applied on the shareholder. In the case of Brazil, the 34% might seem high, but actually because we don't charge taxes on dividends, it is comparable to international standards in a sense. And Peter Scheller from our group, or Silvia, if you want to add comments on how would be the taxation of the shareholder. And Peter Scheller was saying it depends on whether we're discussing a partnership or a corporation. In reality, if I get it right, Peter, in a partnership where you have the taxation of the shareholder, ultimately on the shareholders, as in the case of individuals, are subject to a tax rate that can go up to 45%. But I would like to ask our German friends to complete this comparison by saying what would happen in case of a corporation, or how far taxation can go. Silvia, Peter, or friends.
Sorry, I don't think I got the question right here. Very different Germany for shareholders of corporation and partners for partnership, because from a partnership, actually, there is no dividend. What we're talking about, individual. When we have a partnership, there is no dividend distribution. So there is a direct transfer of the profits of the income of the partnership to the partners. So this is going to be taxed at the level of the partnership directly. So it is a complete different system. When you have a corporation that is distributing dividends, of course, you have the withholding tax at the level of the distributing entity, and the taxation with corporate income tax at the other level, and trade tax normally. But if you have a partnership, you will have, there is this concept, this whole concept of distribution doesn't exist. So you have this transfer, and at the level of the corporation, this income is going to be taxed as a normal taxation, as a normal corporation. So if you have an individual at the end of a partnership, of course, this will depend on the amount of income that the individual is receiving, and the tax rate will then differ and vary and be higher if the amount is also higher. So I hope this answers the question. And, so are we still on time?
Yeah, let me finish just with the comment from Leonardo Di Monte, who was asking about if there was a way to avoid the Brazilian withholding tax in case of a cost-sharing agreement. And I'll just say my personal view here. I think cost-sharing agreement does not really change the problem, because either we're paying for a service that was contracted abroad by a German service center, and Brazil has a look-through approach whereby we try to find what's behind the cost sharing, what's being shared. If it's a service in the end, we would apply the 15% withholding anyway. Or a second possibility would be we're sharing internal resources of the company that is the centralizer, the service center, as you said. And in that case as well, I think we cannot avoid withholding tax, at least based on current tax rulings and case law that we have in Brazil. I don't see a particular feature of cost-sharing agreements that would avoid withholding taxation. But I think Professor Frotscher, that we have exceeded our time here. So I will thank everyone for your audience, and we'll stay for the next presentation.
Thank you very much from my side.
Yeah, thank you very much for this presentation. We can then go to the second presentation. That is the panel for transfer prices. Speakers are Eduardo de Paiva Gomez for Brazil and Sebastian Hoffmann for Germany. Please start your presentation.
Morning. Thank you, Professor Frotscher. It's a pleasure to be here with all of you. I'll share my screen. Well, here in panel 2, we are talking about transfer pricing rules. And in the scope of our research, we dedicated our efforts studying these 8 topics. But due to our time limits, we will talk about only topics 1, 3, and 4, and especially highlighting the main differences between Brazilian legislation and German legislation. Of course, me and Sebastian, we are just the speakers of our group. This group is related to the members in the screen, and we appreciate also the efforts of our focal points, André Felix Ricota and Richard Lebro. Please, Sebastian, feel free to initiate your speech.
Yes, thanks, Eduardo. When I first heard about the project, I thought it's very interesting, because how can you compare something which is basically not comparable? And I guess in a nutshell, that's transfer pricing in Germany and the rest of the world, and transfer pricing in Brazil. Germany is a member of the OECD. Germany has ever more in the last years adopted the OECD view when it comes to transfer pricing. Germany has discarded a lot of administrative principles in the last years, which were kind of a German special way in approaching certain transfer pricing topics, and has really embraced the OECD approach. German transfer pricing is heavily based on the notion of the arm's length principle. For those of you who don't know what the arm's length principle is, it basically imposes the restriction on companies that intercompany transactions need to be priced in accordance with the conditions that would have been imposed by third parties on the free market. So that's Germany. Brazil, on the other hand, is not a member of the OECD, although Brazil is heavily trying to join the OECD. It's seen as one of the potential members down the road, probably something like 4 years from now. And we have also seen that Brazil is working with the OECD on aligning the tax system, and the OECD sees the Brazilian fiscal system as one of the major hurdles to get into the OECD. Brazilian transfer pricing is a relatively new thing. Brazil implemented transfer pricing legislation in 1996. There is explicit reference to the OECD transfer pricing guidelines and the arm's length principle, but then you will never find it again. So Brazil has a very unique approach, specific methods. Also superficially, they appear to be related to the OECD ones, but they are very Brazilian interpretation, which rely heavily on predefined margins and markups and don't need to be necessarily be at arm's length. In Germany, transfer pricing rules apply to cross-border transactions between related party, and transactions means all type of business transactions thinkable, which may exist today or may exist in the future, and the control concept is applied. So control is not from an accounting perspective, but rather from the perspective of can the party influence the transaction in Germany. This is seen mainly when there is an ownership of 25%. Brazil, on the other hand, restricts the type of transactions which are which need to be according to transfer pricing laws. These are transactions involving goods, services, and rights. And Brazil is not only applying the transfer pricing rules to related party transactions, but also to transactions with unrelated party in low tax jurisdictions or in countries where special preferential tax regimes can be chosen. As already outlined, and we will see it on the next slide, there are similarities, but also deep differences between the transfer pricing methods that need to be applied. Brazil has unique transfer pricing methods, whereas Germany has basically adopted the transfer pricing methods as outlined in Chapter 2 of the OECD transfer pricing guidelines. This has not always been the case. For those who remember, until 2021, there was a very strict preference of the traditional transaction methods. In Germany, in Section 1 of the Foreign Tax Code, which is the cost plus method, the resale price method, and the comparable uncontrolled price method. But this has changed. I guess it has changed also with the notion of the German tax authority towards transfer pricing, towards the understanding of more complex value chains. This is currently not seen in Brazil. One thing that I had to learn when I came to Brazil was that you differ between inbound and outbound transactions. So there are specific methods which needs to be applied for inbound transaction, which means the import of goods, services, and rights, as well as there are methods for the export of said transaction. In Germany, there is no distinction. So basically, you can apply the same method that you can apply to inbound and outbound transaction. Change. Okay, thank you. So this slide basically compares and summarizes the difference and the similarities between the methods. As we see there, the CAP method, which is, I would say, the default method of the OECD, has a kind of a sister in Brazil, which is the PIC and the PIVEX. Both methods apply comparable prices for transaction. So here in this case, we actually have a quite strong similarity between OECD and Brazil. One of the main differences is that we see the CAP applied in transactions involving intangibles and intercompany financial transactions, which would not be possible in Brazil, at least for financial transactions. And normally, Brazil does not allow external comparables. Other methods are the cost plus method. There is also a Brazilian method, which is based on cost plus a markup, as well as the resale price method, which we have the PRL, which is the most applied method in Brazil when it comes to import transactions, which is basically the resale price minus a margin. But there are huge differences in its application. The Brazilian transfer pricing system is very much transactional. So you look actually on a material by material number normally, whereas in Europe you can combine comparable services, comparable products into one so-called transaction group. This is often referred to as basket approach. And then you can kind of have an average markup or an average resale margin for these products. In addition, under the OECD, there is no restriction to use external comparables. So if you find a markup from a database, which is from a comparable company, comparable industry, risks, assets, functions, there is no limit to apply it. In Brazil, for the CPL, PRL, CAP, and PVA methods, there are actually discounts and markups stipulated by law. What is probably the most interesting thing for European or foreign investors in Brazil when it comes to transfer pricing is that nowadays transfer pricing heavily relies on transactional profit methods. And these are the TNMM, the transactional net margin method. And when it comes to the involvement of unique intangibles, the profit split method. And here we run into huge problems and potential economic double taxation, because there is no such thing as the TNMM or the profit split in Brazil. These methods simply don't exist under Brazilian law. So here, the investor or the companies have the problem that they need to align different type of transfer pricing models. If a Brazilian company imports or exports commodities, it needs to apply the PCI or P6 model. These methods are specifically for the import and export of commodities, and they use a benchmark index for the pricing. And here we see that there has been some convergence between the general OECD approach towards commodities and the so-called SICT methods used in many commodity exporting countries. So since 2017, we basically have a more liberal approach from the OECD towards commodities, which allows also the CAP method in combination with the benchmark index. Now, in a nutshell, what we would see, OECD transfer pricing, which is applied in Germany, has a very economic background, comparability. How would a market price something? Whereas in Brazil, transfer pricing is much more of a compliance and maybe tax accounting thing, because either you achieve the predetermined price or you have a transfer pricing adjustment. So Germany has a relatively high complexity, which is paired with a flexibility in reflecting the company's value chain, whereas Brazil has little flexibility, but a high certainty when applying the methods. Thanks, Eduardo. Okay, jumping into transfer pricing for intercompany financing, one of the hottest topics at least in Germany in the last year when it comes to tax audits. We have structured this a little bit differently, pros and cons, and it took us some time to find pros in Germany. The one pro definitely is that Germany, as I already said, approached the OECD or embraced the OECD even more strongly in the last years with the administrative principles from 2021, administrative principle transfer prices. The OECD transfer pricing guidelines have actually found their way into at least the mind of the German tax authorities. So now with the 2022 OECD guidelines, there is specific guidance on transfer pricing for intercompany finance, and that's good for companies who deal with transfer pricing between OECD countries. There are, however, certain difficulties when it comes to transfer pricing for intercompany finance in Germany. Over the last years, there has been very little guidance till basically 2021 and 2022 with the new OECD guidelines. So it was mainly based on case law, discussions in tax audits and so on. And we have seen some very interesting developments when it came to court cases. Fiscal Court of Münster with a kind of cost plus approach towards intercompany loans. Then there has been the Fiscal Court of Düsseldorf and Cologne, which also had a kind of diverting verdicts on intercompany cases. And then I guess this was kind of the biggest shock in Germany when the highest fiscal court, the BFH, basically ruled that the blocking effect of Article 9 of the OECD Model Tax Convention would not be applicable, or would not only be restricted to the price, in this case, the interest rate, when it comes to intercompany financing, but that conditions would actually be much wider. And this was immediately reflected in tax audits when you discussed with tax auditors back in the days, and I guess it didn't change so much to today. They started to question basically all the conditions imposed in the loan contracts. Cash pools have been attacked, and so on. So it's very interesting. We still are not probably in the safe harbor when it comes to intercompany financing in Germany. We see a very aggressive and pro-fiscal approach from the tax authorities, and we probably still see some attacks on the blocking effect of Article 9 of the OECD Model Tax Convention.
Thank you, Sebastian. Well, as Sebastian already mentioned, Brazilian law regarding transfer pricing is very unique, and its uniquenesses brings some positive and negative aspects. So regarding transfer pricing rules for financing, in a very brief and summarized definition, we could say that interest can only be deducted or recognized as income only up to an interest rate, okay, fixed by law, increased by spread established by the Ministry of Finance. So as the way it's prescribed by law, such legislation would be applicable only to interests related to typical loans. So we could also say that some other types of financial transactions would not be in the scope of the transfer pricing or financing rules. So cash pooling, hedge operations would not be expressly subject to these rules, what raises questions if the general rules already explained by Sebastian would be applicable. So regardless this approach by the Brazilian law, the positive aspect is that we have some kind of legal certainty because taxpayers already know the exact interest rate that will be applicable in a typical loan regarding the interest rate that can be deducted or recognized as income. And this would be a very good, very positive aspect of the Brazilian legislation. On the other hand, we have some negative aspects. So one of the first, our group believe that the first negative aspect of this legislation would be that this interest rate cap prescribed by law may not reflect the real economic characteristics of the transaction. This is because the legislation only takes up in account that if the transaction has an interest fixed rate and the currency involved in this loan. Other types, other characteristics of the transaction are not taken into account to apply the legislation regarding transfer price rules for finance. And another negative aspect of this legislation is that there are no mechanisms allowing taxpayers to challenge such interest rate cap. As Sebastian mentioned, Brazilian legislation regarding the general rules for transfer pricing, they have, even in an abstract way, a prescription that you can challenge some method when applying to your operation. But that is not true regarding transfer pricing for financing. If you have an operation characterized as a typical loan, the interest rate will be subject to this limitation. And another negative aspect would be there are some questions, how can we apply some other general rules that may be applicable to typical loans, such as thin capitalization rules and the general deductibility rules. The issue is that we don't have an order prescribed by law to apply such rules. We don't have a specific and clear guidance if we have to apply general rule deductibility rules first or thin capitalization rules first. So this may raise questions regarding legal certainty. And the last negative aspect that we would like to share in this presentation is that we have some kind of legal uncertainty regarding the application of general pricing rules to some transactions. So when we are dealing with cash pooling, which general transfer price rule will be applicable? If we are talking about hedge operations, which general rule will be applicable? We have some questions regarding this, and we don't have a specific guidance even related to normative rulings issued by Brazil's federal revenue in order to offer some clearness regarding these operations. So transfer pricing rules for finance in Brazil follows the uniquenesses of Brazilian legislation. Even though we have a very good and positive aspect, we have also some negative aspects comparing to the German regulation. Following in the topics of this presentation, we would like to talk about a little bit the transfer prices for intangibles. So the main point regarding transfer pricing for intangibles by the Brazilian perspective is that we don't have a concept of intangibles prescribed by Brazilian legislation related to the application of transfer pricing rules. There are some discussions if we had to apply the concept of intangibles prescribed in the company law. But the question is that in transfer pricing rules, we don't have a specific guidance in intangibles. As Sebastian said, Brazilian transfer price rules are applicable to goods, services, and rights. So we don't have specific guidance regarding intangibles. Some kind of intangibles, if we could qualify as that, are subject to other rules, such as royalty. Royalty has a specific limitation of deductibility, but they are not inserted in the scope of Brazilian transfer price rule. This is something very important. So if we talk about some kind of operations, they will not be in the scope of transfer pricing rules. So you have to analyze if there are some other rules applicable to the payments related to this operation. And if we surpass this question, if we assume that transfer price rules may be applicable to intangibles, we also don't have specific guidance which method would be applicable. What may raise questions regarding legal uncertainty, and alongside that, the principle of legality here in Brazil may be a major difficulty to apply transfer price rule for intangibles. The question is that if the law does not prescribe expressly its application to transfer price for intangibles, some argue that these operations would not be subject to transfer price rules due to the absence of law. So this is a very important issue that we have to deal regarding intangibles, and we have to see if it's related to a specific rule that's not in the scope of transfer pricing rules, but it's an existing rule. On the other hand, we have a legal certainty, as we already mentioned. It's an option made by Brazil. We have fixed margins, we have fixed prescriptions of the law. So if you follow the law, you may have some kind of legal certainty, even though some operations with intangibles, we may have some questions whether how Brazilian's federal revenue would face it, would qualify it, and depending on its qualification, it may have some effects regarding transfer pricing rules. Sebastian, please feel free to talk about the German perspective.
In Germany, transfer pricing is 100, intangibles are 100% transfer pricing, so there is no restriction. And again, here we see this alignment or strong alignment with the OECD, especially when it comes to intangibles. So the new version of Article 1 of the German Foreign Tax Code deals exclusively with transfer pricing implemented the DAMPI concept. DAMPI, this is development and maintenance, protection, and exploitation. It's kind of the functions which we see when intangibles are developed and then exploited or used in the production process. So the DAMPI concept, it's interesting because it implements a new concept of economic ownership. The intangible can be owned by one party, but the returns of this intangible can be attributed to another party, and this is the party which performs most of the DAMPI function and bears, of course, the risk related to this. So again, the good news when it comes to mutual agreement procedure, Germany is strongly aligned with the OECD. Of course, everyone knows, whoever dealt with intangibles, it's very hard from a transfer pricing perspective to find the price. The OECD wrote a lot about the so-called hard to value intangibles, which are unique and valuable. And Germany has gone a very specific way when it comes to determining the prices of these intangibles, but also in the case of business restructurings to determine the price of the so-called transfer package, which means the price for the business restructuring. It's not a method that's interesting, but it is an approach, and it's called the hypothetical arm's length approach. And you apply the hypothetical arm's length approach in cases where you don't have data. The hypothetical arm's length approach, it basically simulates a negotiation between two prudent business manager which try to maximize the profit of their respective companies. So it's based on forward-looking returns determined mainly by valuation techniques. Of course, Germany, but get a certain issue in case that you apply these valuation techniques, because as already said, it's forward-looking, so you need to be very very robust planning data. This is very often questioned by the tax authorities, and then you need to think a lot about how you define the parameter space, which means interest rates, useful life of the assets, and so on. And this has led to a lot of discussions in tax audits. And there is indeed a lot of things which are open to interpretation. And we should not forget that, of course, the tax authorities have the virtue of hindsight. They normally look at the case when it is already done, and of course have a better basis. So we have of course, a high level of uncertainty when it comes to pricing intangibles in Germany. And unfortunately, we lack this very clear guidance that we normally see in Brazil. Okay, I guess that's so far from our side.
So, thank you, Sebastian and Eduardo. Maybe we can speak about two questions there in the chat. There's the first from Marcus Brehm, and I think it was one of the first slides of you. He asked, are such methods for price setting or arm's length testing? I think it was the second or the third slide.
Yeah. Yeah, it's an interesting question. I don't think that anyone from the Brazilian perspective thinks about the setting versus testing approach. In the end, you can set transfer prices the way you want. You test them for Brazilian tax purposes for your corporate income return. So basically, there you look really at a transactional basis. For example, if you, I don't know, import automotive parts, then you look at part number by part number. You apply one of the methods, you can apply the one which is beneficial for you, but in case transfer prices are not in accordance with the Brazilian law, you immediately adjust them. There is no transfer pricing documentation where you discuss economic circumstances, functions, and risk. This is simply not included from a Brazilian perspective. So in case that your transfer price deviates from what is basically in accordance with the Brazilian law, you immediately adjust it.
Okay, thank you. And there's a question from Rodrigo Sovka. If Brazil enters the OECD, much would change in the rules of the transfer prices, especially regarding legal certainty. Do you want to answer? Or Eduardo?
Yeah, I think I will answer, and then Eduardo, because this is up to discussion. It's not known how it will look like. Unfortunately, due to Corona, I think it has been a little bit delayed, the whole process. Last week, we heard that the finance minister, Paulo was in Paris and also discussed the OECD session of Brazil. So there is a process. Stuff happens. What we see from my interpretation, and Eduardo might have a different one, is that what we see from the Brazilian perspective is that they try actually to preserve as much of the legal certainty as possible. They have sent a questionnaire to interested group stakeholders where they asked about the application of safe harbor regimes. And for the ones of you who are familiar with the OECD guidelines, there's also a chapter on not a chapter, but the subsections on safe harbors, and the OECD is open to safe harbors as long as it's aligned with the arm's length principle. So it will be very interesting how Brazil will do it. Of course, if you adopt the OECD guidelines, if you have hard to value intangibles, I think it will be hard to have a safe harbor for such transaction. I can't imagine a safe harbor for profit splits, but of course, for a lot of transactions, it's possible. And if we look at BEPS 2.0, Pillar 1 Amount B, I guess this goes strongly also in the direction of a safe harbor type of approach. So I would expect something like this for Brazil. Yeah.
Well, I would like just to add that regarding the entrance of Brazil in OECD, first we have to bear in mind that not only the tax law would have to change, but some other aspects of Brazilian law would have to change, especially related to environmental law. So it's important to mention that tax law is not the only obstacle in this aspect. And as Sebastian said, Brazilian tax law has it's unique regarding transfer pricing. This is not necessarily bad or necessarily good. It's only a question of fixed margins. So Brazil, the first thing it should abandon would be the fixed margins, or even say in a way how these fixed margins are arm's length principle, maybe something expressly in this way. I believe that Sebastian shares the same opinion. So this would be just an approach regarding arm's length principle.
Yeah, I thought that Marcus wrote something in the chat. I mean, what I did want to say is that you necessarily that you can't align the outcome that you would have under an OECD and under an OECD model and under a Brazilian model. The thing is, Brazilian doesn't apply the arm's length principle, so you inherently have the risk of economic double taxation.
Okay, so thank you for the presentation. Now we go ahead to the third panel about fiscal federalism, and the speaker is Alberto Macedo.
I think my panel is panel 4.
It's panel 4.
Now it's panel 3. It's correct?
Now it's panel 3, isn't it?
Oh, okay. Now it's panel 4, federalism, fiscal federalism, okay? Okay. Let me share you the presentation. Just a minute. Well, okay, good morning, everybody. This is the panel 4, Fiscal Federalism. First of all, I'd like to thank you for the opportunity to participate in this tremendous project. I've learned a lot with it. And I'd like to thank my group for the opportunity and confidence to present both Brazilian and German sides. The agenda with the Fiscal Federalism in Brazil, general overview of Brazilian federal system, tax jurisdictions, Brazilian tax revenue sharing, the different funds, and tax revenue sharing to states and municipalities in Brazil. From the German side, we'll talk about the Fiscal Federalism in Germany, talking about tax revenue in Germany in 2020, and about tax sharing system, joint and shared taxes, and financial equalization. Let's begin with the Fiscal Federalism in Brazil. Brazil is a continental country with a large population, about 212 million inhabitants, with many natural resources and important economy, and a federation of 3 levels, union, states, and municipalities, a great inequality between states and between municipalities, and each federative level has its own legislative attributions, expenditure assignments, and tax legislation. About tax jurisdictions, Brazil relies on consumption tax revenues more than direct taxes, and the revenues are distributed between the 3 federative levels. The union has the vast majority of taxes, no earmarked taxes. The revenue of them is shared between states and municipalities, and social contributions, earmarked taxes, revenues belongs exclusively to the federal government. There is a great concentration of tax revenues at the federal level. Brazil is rich in natural resources, but the distribution of revenues benefits very few states and municipalities. And there are 4 ways of redistributing tax revenues. Regional equalization funds, FPA and FPM, we'll talk about them later. Compensation funds, voluntary transfers, and funds for a specific purpose. This table shows the Brazilian tax revenue sharing, the type of redistribution, the funds, and the purpose of each one. There are the regional equalization funds, the state participation fund, FP, the municipal participation fund, FPM, the fund for financing the productive sector in the north, in the northeast and Midwest regions, the poorest regions. The purpose of these funds, the federal tax revenues is shared with states and municipalities for equalization purpose. There are 2 compensation funds, IPI, the manufactured goods tax, exploitation, country law, FPX, funds to compensate tax exemption on exports, and voluntary transfers with agreements between federal government and states and municipalities. There are funds for a specific purpose. The Basic Education and Maintenance and Development Fund, the Unified Health System, SUS, and contribution for intervention in the economic domain, the city, regarding fuels, the revenue destination for a specific purpose for these funds. The FPE, the State Participation Fund, revenue comes from federal taxes, income tax, and the industrialized products tax, 21.5%. and 1% goes to the PASEP, the Public Servant Asset Formation Program, and 20% to the FUNDEP, the Basic Education Maintenance and Development Fund. The FP is distributed between the 27 states and in a calculation based on population factors and the inverse of the per capita household income of each state factor. The Municipal Participation Fund, FPM, revenues come from federal taxes too, the income tax and the industrialized products tax, 25.5%. And the FPM is distributed between the 5,570 municipalities, 10% going to the capitals and 86.4% going to the inland municipalities. 3.6% goes to the reserve municipalities, who has more than 143,000 inhabitants. The calculation is based on population and per capita income factors too. There are the regional equalization funds, North and Northeast and Midwest regions to finance the productive sector in this region. The 50% of this has to go to the semi-arid and Northeast. It's composed by 3% of the industrialized products tax, IPI revenues, 3% of income tax revenues deducted from the income tax withheld by municipalities and states. Of the 3% mentioned above, the distribution between regions will be as follows: 0.6% for the Constitutional Finance Fund of the North, 1.8% for the Constitutional Financing Fund for the Northeast, and 0.6% for the Constitutional Finance Fund for the Midwest. The compensation funds, we have here some like industrialized products tax on exports, IPI exports, and the country law. As you see in the slides, the distribution of the revenue of the funds between states and between municipalities. The voluntary transfers are funds transferred to states and municipalities due to agreements, conventions, and other similar instruments. The purpose is to carry out work and or services of common interest to the three levels of government. The fiscal responsibility law establishes some conditions in accordance with the budget law. Funds cannot be used to pay employees. It's for purpose other than those agreed. States and municipalities must prove the payment of loans to the union, and reports on the use of funds received and show that the application of funds respect constitutional limits on education and health expenditures. The FUNDEB, a Basic Education Maintenance and Development Fund, revenues come from taxes like ICMS, the state VAT, IPVA, the motor vehicle property tax, the ITCMD, it's inheritance and gift tax, and the ITR, rural land property tax, and other taxes, other funds like FP, FPM. The Unified Health System, revenues to it come from the federal government, 15%, the state government, 12%, and municipalities, 15%. The tax revenue sharing to states and municipalities. In Brazil, we have from federal government to states and to the municipalities, and from the state government to municipalities. From the federal government, we have the income tax withheld by municipalities on income paid on the purchase of goods and services. 100% maintains with states and municipalities. And the financial transaction tax, IOF good, when defined in law as a financial asset or as exchange instruments. 30% to the states and 70% to the municipalities. The federal tax on rural property, ITR, 50% to the municipalities, but it can be 100% of such collection in the case of the ITR being controlled and collected by the municipalities in agreement with the federal government. From the state government, we have the industrialized products tax on exports, IPI exportation from states. 25% of the 10% received by the states goes to the municipalities. The state tax on the motor vehicle property tax, IPVA, 50% goes to municipalities where the vehicles are licensed. And the federal government contribution tax on intervention in the economic domain, the city regarding fuel, 25% of the 29% received by the states goes to the municipalities. And the state VAT, the ICMS, 25% goes to the municipalities. On the German side, the Fiscal Federalism in Germany, we begin talking about the basic law. Germany, for historical reasons, has a basic law, a Grand Gazette constitution that's markedly federalist. From a constitutional standpoint, Germany has a two-level system, the federation, Bund, and the states, Länder, and municipalities must be seen within the states level. There is a federal parliament at national level, but there is also the federal council, Bundesrat, which is a constitutional body made up of members of the governments of the states appointed at the state level. Execution of law lies at states level unless the basic law states otherwise. The Article 28 says that municipalities must be guaranteed the right to regulate all matters of the local community within the framework of the laws on their own responsibility, unless a law designates other institutions, the principle of universal jurisdiction. There are two fundamental provisions of the basic law to be considered, reflecting the strong federal character of Germany, but also the responsibility of the federation for the whole country. The Article 72, which says that the central tax of the federation is to establish equivalent living conditions in the federal territory. The Article 107 of the basic law, which says that, the adequate financial strength of the states shall be established by compensations. And the basic law requires that the budgets necessary to cover federal and state expenditures form the starting point for the distribution of tax revenue. The German revenue sharing and equalization mechanisms, two layers for the federal states and for the municipalities in each state, respond to this mandate. Tax collection takes place by the Länder in an essentially uniform manner, and the legislation is primarily concentrated at the federal level to avoid regional distortions. Here we have the diagram called the tax spiral. It shows the total revenue, tax revenue in Germany in 2020 and its distribution among the individual types of tax. It shows tax revenue in Germany total 717 billion euros in 2020. The tax types with the highest tax revenue were value added tax at 218 billion euros, wage tax at 207 billion euros, income tax at 53 billion euros, and local business tax at 42 billion euros. The three biggest taxes are shared taxes, where each level participates, as shown the slides as follows. The major municipal tax, the trade tax or local business tax, stands on fourth place in this revenue statistic. In German, there are still a lot of small taxes, not all are translated here, due to historical reasons, like beer taxes or alcohol taxes. Among others, for the taxes with the highest yield, the legislative power lies with the federal parliament. It means there is a uniform legislation for the VAT, wage tax, income tax, and trade tax, but also for other taxes all over Germany. The state tax administrations have to execute the laws and the respective instructions to collect the taxes. The federal government has some supervision rights regarding the implementation of federal laws. Regarding that, the European Union has taken over a lot of legislation initiatives due to the common market and the free trading in the European Union. The tax revenues in Germany can be divided into exclusive ones, where the revenue power lies completely at the respective political level, and those coming from the shared taxes. Local level must be seen within the state's financial system unless a direct participation in shared taxes is foreseen. The tax sharing system, joint and shared taxes and financial equalization can be divided into 4 steps. Step 1, vertical distribution of tax revenues, joint and shared taxes. Step 2, horizontal allocation of joint shared taxes. Step 3, horizontal adaptation of the financial strength among the states, equalization among the states. And step 4, supplementary federal grants. And step 1 contains the vertical distribution of tax revenues. According to the basic law, the 3 biggest revenue sources, VAT, personal income tax, and wage tax, as well as corporate income tax and settlement tax, here called financial withholding tax, must be distributed among the 3 political levels in Germany: federal, state, and municipal. It's a vertical distribution. So, the step 2, the horizontal allocation of tax revenues. Here it means that the total amount of state shares in the joint taxes is once again dissected. The mechanism tries to establish a correct assignment to each state's own revenues. The idea behind is a dissection of the joint tax shares to adjust imbalances regarding the locality of taxes. The following principles apply for the dissection. Personal income tax is dissected with the aim of determining the share of income tax for the inhabitants of the state, regardless of where the income it was earned. In principle, wage tax statistics are considered. The corporate income tax is paid where the registered headquarters is located. The tax is in principle dissected according to the place, states, where the companies have production place, respectively where they maintain branches. The value-added taxes is principally dissected taking the number of inhabitants of the states as criterion. This graph shows the situation of tax revenues before and after the distribution process of the tax revenues, the vertical distribution and the horizontal allocation of tax revenues. It shows very clear that the shared taxes, the biggest part of the tax revenue with about 73% of all tax revenues, are distributed in a comprehensive form. It's important to mention that the contribution of Germany to the European Union has to be considered in the federal level share. But the distribution leaves still huge imbalances, which will be compensated partially by the step 3 and 4 of the equalization system. The horizontal adaptation of the financial strength among the states, equalization among the states, step 3, and the supplementary funds from the federal government, step 4. The step 3 realizes the horizontal financial equalization among the states. The graphic on the left side shows the contributing states and the receiving states above the zero line. In 2020, there were 5 paying states and 11 receiving states. The criterion for this formula is the financial strength per capita of the state. Also, the tax revenues of the municipalities in the states must be considered in this formula with 75%. The basic assumption in the formula is that all states have the same requirements per inhabitants, although there are adaptations in the formula considering specific conditions of the state, extensions, density of population, and if the financial strength per number of inhabitants is higher than the national average of the per capita financial strength, the state is in the obligation to contribute to the state's financial equalization. If the figure of the state is lower than the average, the state receives equalization payments. The graphic on the right side shows step 4, the supplementary federal grants. There are payments to weaker states in order to compensate remaining gaps as well as transfers for specific needs. It means to complement the previous mechanism. It constitutes the final step in the sequence of the finance equalization mechanism. There are several categories of supplementary funds, like general supplementary grants, supplementary federal grants for special needs. For weaker states, the equalization mechanism is very important. It represents up to about 40% of their revenues. On the other hand, paying states can lose sometimes up to about 18% of their revenues. There's a second equalization mechanism in the states, not in city states, which is called municipal financial equalization system, in order to cope with imbalance among the municipalities in the states. It's a relatively complex mechanism which corresponds to the responsibility of the states to care for the municipalities. Okay, now I'd like to thank you all, and I give back the word to the coordination. Thank you very much.
Marco?
But can we?
Maybe it's
I think there's a question here in the chat.
Yeah, maybe he has some technical problems, but Marco wanted to ask the question, but we can do it.
Okay, Alberto, what can we stretch from the German federalism to apply in the Brazilian federalism in order to reduce the tax controversies known as fiscal war between the federation entities? Well, I think it's Brazil is very peculiar. We have to know Brazil's system to solve the Brazilian problems. One thing I think is useful is the German method of unifying the legislation, the tax legislation in the federal level. I think it's important here. In Brazil, we also have it, but in a lower level. I think we can improve it in Brazil in a more general way, so as you can have a unified system in terms of legislation, in terms of tax legislation.
Okay, thank you. There's another question from Larissa. How does German law secure the autonomy between the distribution to the states? What is the amount that each state will receive?
Could you repeat, please?
Yeah. The question was from Larissa Almeida. How does German law secure the autonomy between the distribution to the states? What does that define the amount that each state will receive?
Well, it's a very complicated method. I don't know it in detail now. Here having an idea. We know that learning from the German side, the German friends know it's very complicated. If any German person could explain here, I'll be very grateful. But I cannot go in details to the methods of distribution of the revenue between the states.
Okay, then there's another question for Marianne. In the Brazil context, how the fiscal benefits granted by the federal government affect the shared receipt of the states and municipalities? Is there any regulation for assecurate a minimum preservability of aggregation from these entities?
Yeah, it's a big problem here in Brazil because some revenues, some taxes, federal taxes, the union use as extra fiscal, with an extra fiscal attribution. For example, the industrialized products tax, when the union uses it to get lower taxes for the industry, but it represents revenues for the states and for the municipalities. It's a big problem here. On the other side, you have the social contribution, a very large amount of revenue, which is not distributed between states and municipalities. And it's a huge problem here in Brazil when we have taxes which union uses for another finalities, another how can I say, another solving some problems that is not has nothing to do with states and municipalities.
Okay, so I have a last question from my side, if I can ask something. What do you think about the guerra fiscal, though in Brazil, and we do not have this in Germany? So, what do you think in future? Could we have a guerra fiscal also in Germany, in your point of view?
Can we have future war fiscal in Germany? Is it the question? Or in Brazil?
Yeah, the question is, could we have a fiscal war in Germany within the states, in your point of view?
Yeah, I think in Germany, between the states in Germany, I think it's a low problem, because it's a problem not very huge, because it has a unified legislation. But of course, the localization of the operations, it's always bring us some problems to interpret it. It's a problem when we have a subnational level of taxation. Of course, in Brazil, I think we are in the some steps backwards, so we have to advance in Brazil in the uniformization of the legislation. But localization is always a problem when you have a subnational taxation. But it's context of federalism. We have to solve the problems with electronic systems, unified legislation, so as to give the taxpayers less problems to solve, and the administration has to solve the problem, most of the problems. That has to solve the most of the interpretation, so as the taxpayer has a clear system to deal with.
Okay, thank you, Alberto, for this very good presentation. And now we go ahead to panel 4. It's taxation of digital goods and services under the absence of a global standard. And there the speakers are Eduardo de Paiva Gomes and Peter Scheller.
Good morning, everyone. So I'll share my screen again to deal with this panel 4. Just a minute. Okay. Well, Peter and I will talk about some of our findings related to our research, taxation of digital goods and services. So here are all of the members of our working group. Of course, we are just the speakers, and all of this is related to the work of this amazing group. And I would like to thank Christiane McNaughton and Ivan Ozai, especially due to the fact that our focal points. And I thank Peter Scheller, it's here with us as the focal point of the Germany group. Okay, here are all the members of our group. So, talking about taxation of the digital economy, of course, we are talking about a very deep topic, very controversial, and very update. So due to our time limit, we will talk about some specific issues regarding some specific business models. In our research, we researched about 5 topics: online marketplace, subscription business models, crypto assets and distributed ledger technologies, Internet of Things, and 3D printers and manufacturing. And here in this paper we are writing, we are dealing with the main business models and its issues regarding taxation of the digital economy from the German side and the Brazilian side. When we talk about taxation of the digital economy, we should talk about the context we are living. Right now, we have a legislation that is related to the brick and mortar economy. So what does that means? It means that the law in force was designed for tangible assets. When we buy a product, a good, we automatically think about tangible assets, and provision of services was something very relatively easy to distinguish from the purchase of goods and products. So the brick and mortar economy based on tangible assets would bring this security. It also would be possible to identify the international trades due to the tangible assets. But the thing is, the digital economy and also the digitalization of the traditional economy brings some challenges, most of them related to intangible assets. The digital economy brings us new types of business models, and also the digitalization of the digital economy means that new ways to conduct traditional business models. So now we are facing a challenge due to the fact that we have legislation in force based on brick and mortar economy, and we have the digital economy in which it's very hard to differentiate what is an intangible product, what I mean, purchase or selling of a good and product, from the provision of services. And due to the fact we are dealing with intangibles, we have borderless transactions, cross-border transactions, and the impacts of such cross-border transactions sometimes are not prescribed expressly in the law. And this new economic perspective brings us complex and mixed operations. So we have to deal with these mismatches of the law in force regarding that was enacted based on a brick and mortar economy, and now that we face the digitalization of the traditional economy and the digital economy. When we started our research and many discussions between Brazilian and German members, we think it's a good a starting point to make this hitchhiker's guide to consumption tax in Brazil. Why is that? Because here in Brazil, our consumption taxes are divided between all the federal, state, and municipal level. So we don't have just one consumption tax. We have different consumption taxes that are applicable in different situations depending on the qualification of the operation. Here we put some of the federal consumption taxes. We have IPE, that is a tax levied on goods and manufacturing, importing stage. If you manufacture something, you have to pay IPE. We have the state consumption tax, ICMS. It's the tax on goods, and it allows the input credits. And municipal tax, with the tax on services. See, the main issue here is that if we qualify out an operation as a purchase of good, it will be the state tax will be levied. On the other hand, if we qualify this operation as a tax service, we would have this municipal tax, so we wouldn't have to pay the state tax. And also taking some of the words that Alberto Macedo mentioned, this is one of the issues that may bring the phenomenon, this fiscal war. State, municipal, and federal, they look at the operation with different glasses, and these different glasses may result in different qualification of these operations. And after saying this main perspective about the Brazilian legislation, I pass the floor to Peter Scheller. Please, Peter, feel free.
Okay. Can everybody understand me? Yeah, okay. What we found in our group was that we are much more based, or we have much more to say about consumption tax than to income taxes, especially from the Brazilian side, as we could see, it is so fragmented, which is unknown in Germany. In Germany, we have a VAT system which is actually based on European law. It's on various EU directives, and Germany has therefore an overall one VAT law. Here I only put together what in the transborder transactions, what we have to think about this, distinguish. We have definitely to distinguish between supplies and services, which are totally different rules applicable. Then we have to find out where's the supplier coming from, Germany, other EU member state or third EU member state. Where's a customer, or what is a customer? Is it a company or is it a consumer? Then, of course, and that is especially here in this respective of digital goods, is direct sales or use of an electronic interface. Especially in the last year, there had been various changes in the German VAT law, especially about the one-stop shop regulations, and interesting for Brazilian probably importers to Germany, the import one-stop shop, but however, this is only applicable in B2C transactions.
So following on our presentation, as we already mentioned in the beginning, we will highlight the main challenges regarding these three specific business models: online marketplace, subscription business models, and crypto assets and distributed ledger technologies. Okay. So by the Brazilian perspective, when we talk about online marketplace, one of the biggest challenges by the income taxation, and at least perspective, would be the permanent establishment or the permanent representative issue. The question is that we don't have a legal concept for permanent establishment or permanent representative. We have a normative ruling that issued by Brazil's Federal Revenue that is not so accurate regarding the concept of permanent establishment. So if we don't have this concept, we may have issues regarding the allocation of profits about this operation. So and by the consumption taxes perspective, we have some issues depending on the type of the transaction. So if the seller in Brazil is qualified in the same municipality as the customers is not in the same place. Also, if the seller is outside Brazil, we have some different impacts regarding consumption taxes, and also Brazilian legislation makes a difference if the customer is the beneficiary. So by the income taxation, we have the issue about allocation of profits. And here in Brazil, we don't have a concept of permanent establishment. And by the consumption tax perspective, we have to deal with specific characteristics of the transaction due to know and delimitate the tax that would be levied on this transaction. Please, Peter.
Okay. The income taxation in Germany, it depends very much on the question whether we have permanent establishment or permanent representatives. And especially what was surprising for our Brazilian participants was that the German definitions of permanent establishment and permanent representatives are so much wider if there's no double taxation treaty involved, because then the domestic rules come into play, and that makes very quickly a permanent establishment, you know, especially in the online marketplace. If you think about Amazon or companies like this, they have warehouses or even other providers, and warehouses under the absence of a double taxation treaty under German law is considered to be a permanent establishment, whether there is which normally in double taxation treaties are auxiliary services and therefore don't create a permanent establishment. The same depends on permanent representatives. When is sales or support staff can be considered as a permanent representative? Today, they have some legal rights sometimes, and that might even then create a sort of a permanent establishment. Consumption tax, okay, we have only the one VAT law. Transporter tax actions is, we are here in online marketplace. We concentrated on the supply of goods. So into Germany, in the B2B transactions, we have here either imports or inter-community acquisitions. Vice versa, if Germans transfer goods or transports goods outside of Germany, either it's tax-free export or a tax-free inter-community supply. Service providers, we just already talked about this. We have this in the B2C business, the point that we have the principle of destination, country of destination. That means the VAT system says in principle that the taxation should be taking place where a good or a service is consumed. However, that really doesn't work very good from our perspective, because we have the problem there that especially with private consumers, they never, except very, very special exceptions, they never have anything to do with VAT declarations. And that is the biggest problem. And I think that is the biggest problem about this whole concept of country of destination. However, now they try to make it more applicable to foreign companies through this one-stop shop and import one-stop shop concepts, which have been introduced last year. Okay.
About subscription models, what our group identified about the income taxation issues would be the qualification of such model. The question is that we have different tax consequences when the subscription model is related to a software licensing, or if this subscription model would be the payment for the use of software and other related services, such as storage and processing and technical support. So we have the issues regarding the technical services and its tax consequences. Or if this subscription model is a signature of audio video platform by streaming. So if we are talking about streaming, the consequences are different if we are analyzing a regular TV service provider, and this impacts directly in income taxation. And this differentiation also impacts the consumption taxes. As the example of the streaming platform, streaming here in Brazil is deemed as a service, so it would be taxed by municipal ISS, the tax on services. But if we are talking about regular TV shows, this would be taxed by the state as ICMS, as would fall in the broad concept of communication, and also ICMS is levied on communication services. So it's very important when we are talking about subscriptions models to analyze what is being subscribed, if the subscription is a software license, or not only a software license. We have also technical services, or no, we are not talking about softwares, we're talking about streaming. All of these differentiations may impact income taxation.
Okay, the income taxation, interesting, what we found out in our discussions is that the withholding concept, or the withholding taxes from income taxation in Brazil, is so much wider than the German one, especially for digital goods, because okay, in Germany, every foreign entity becomes subject to German taxation, income taxation or corporation income taxation, if it has here a permanent establishment or a permanent representative. If they don't have it, there are only very, very few examples where they become taxable in Germany. But in the especially for subscription models, interesting is the taxation of letting and the sale of rights on the transfer of know-how. And we have in trade tax additional provisions. So, and for VAT, we can see again, we have here subscription models. We are mainly in the sector of services and not of supplies. And the whole concept of VAT, the whole framework for services and supplies are so absolutely different, you know, but the supply of goods always determines where the goods will be transported from where to where, either where does it start or where does it end, you know. In the service, we have lots and lots of different rules, and it depends where, you know, the supplier is based or the recipient is based. And then, you know, in the B2B, we have the so-called reverse charge principles, means the taxation happens where the supplier of the services is situated, but where the recipient of the services recipient, and he has to tax what he receives, which is normally totally the vice versa concept than normal VAT law that, you know, turns around, because normally the supplier of services or the supplier of goods is responsible for doing all VAT relevant. And then we see the B2C again, we have this special rules, which in general, that had been changed last year. Before, every country had a special limit, and up to this limit, the supplier of services didn't have to register there for VAT. Now, this is applicable to companies which have more than 10,000 euros services in the whole of the EU. So even small service providers now will be taxable in other EU countries, which even might be interesting or might be the case for Brazilian companies, you know, because much more quickly they become now tax liable in one of the European countries. The only good thing is that they introduced this iOS system, which now is applicable to all services. So also in subscription models, so that they only have to do their tax obligations and their payments to one tax authority within the EU.
About crypto assets and distributed ledger technology. Here in Brazil, we don't have a specific law dealing with the concept of crypto assets or even the concept of DLT technologies. This thing is very important to mention because not all crypto assets can be qualified as the same. Sometimes a crypto asset may be deemed as a security or a utility token or even a payment token. So they would be, it's very recommended, even by the international perspective regarding the good policies and of crypto assets. Crypto assets should be qualified differently, especially related to its use. So a Bitcoin is not the same as an Ether issued by Ethereum. So this difference is not well dealt with by the law here in Brazil. Here in Brazil, we just have guidance, little guidance issued by Brazil's federal revenue, and it's strongly related to natural persons. So the guidance of Brazil's federal revenue is not related to legal entities. And because of that, we don't have specific guidance about other operations with crypto assets, such as mining or the validation of operations in DLT technologies. So when we talk about Bitcoin mining, mining is the process, in a very brief and summarized way, is a process of validating transactions. I can say by Bitcoin mining that Peter Scheller sent me 1 Bitcoin. So we have a miner and a third party that doesn't know all of us. It validates, he or she validates the operation to say that Peter sent 1 Bitcoin for me. And this is not well analyzed by law if it's a service, or even if it, how to tax this activity by the income taxation. So how can I, if I am a Bitcoin miner, for example, or if I am a validator of other type of protocols, such as proof of stake, as ADA, Cardano protocol, how I will tax the receipt of a crypto asset? How I will tax the receipt of Bitcoin in this example? We also have problems regarding the cost basis. What be the cost basis of this crypto asset? Would it be 0 or even the market value? If I receive crypto assets in the context of my work, if I'm paid with crypto assets, would it be taxed differently if I just buy crypto assets not regularly and just sell it in a non-professional way? We don't have specific guidance, and here in Brazil we have some bill of laws that we are trying to deal with some issues, but some issues that are not directly related to tax issues. And also here in Brazil, as a consequence, we don't have specific accountancy method established. So how can how I will reflect the cryptocurrencies in my accountancy? We don't have it. So we have to follow general standards and try to apply it in attention of the type of crypto asset. This is something very important. We have to analyze what type, what does that crypto asset make? What's the rights involved? And by the consumption tax perspective, here in Brazil, we have some issues regarding if I'm mining, if I'm validating transactions, would be this a service? But it's a service in what sense? What transaction would be deemed as a service? Because when I validate something, when I validate a transaction in a protocol, I may receive fees, transaction fees, or my transaction could be related to a Coinbase reward. And this Coinbase reward is not directly related to the parties involved. It's something that I am rewarded by this entity that would be called protocol. Okay, and in state tax here in Brazil, there is a discussion if we would tax the transaction of crypto assets. When I sell some crypto assets to Peter, for example, if this would be a circulation of goods, if it would be a purchase of goods, but it's a little bit of consensus that crypto assets are not meant to be consumed, so they would not be considered a good. So in this sense, some of the issues regarding crypto assets by the Brazilian perspective would be this way. So Peter, please feel free.
Yeah, from the German side, lots of things are still not verified eventually, because there had been recently a couple of letters from the Federal Ministry of Finance in this respect. However, there's only a little bit, only restricted rulings of German fiscal courts about this. So there's lots of things are still unclear whether how to make it. The first, there are lots of open questions. First of all, the German tax authorities think that cryptocurrency is not a currency. which suddenly makes things. Then what is it? Is it a good? Or is it a service? Whatever, you know. And from there, lots of problems steam. You know. However, in VAT law, there was at least one, I think there was a European Court of Justice rule that the transfer of currency into cryptocurrency and vice versa, at least that is not a supply. That is a service. However, it's tax-free. And there you can see what we wrote down here. It's a tax-free transaction, and this paragraph of the German VAT law refers actually to financial services. There, for VAT purposes, is more considered to be a currency or a financial asset. But for income tax purposes, it's not. So there's lots of uncertainties still in this respect.
So, thank you. Oh, you are not finished. You're finished, I think.
Yes, we are finished. I would say.
Yeah. Okay.
Sorry,
Thank you. Thank you, Peter and Eduardo. So there's still a question from Aline. Do you think that the absence of a clear definition of permanent establishment benefits Brazilian tax authorities?
Well, I think this, considering it's a Brazilian perspective, Peter, if you allow me, I'll try to ask, but feel free to make your comments. I believe that it's also a benefit, but here in Brazil, in a pragmatic perspective, it's very common to see the incorporation of subsidiaries in Brazil. So if we have a subsidiary, it would not be deemed as a permanent establishment. So considering this issue, some companies already incorporate companies here and do not use this permanent establishment strategy. So in a pragmatical perspective, we don't see a lot of discussion about it, because companies, when incorporating in Brazil, they do not use this strategy. Okay.
And I would say the problem arises actually more from the German side than from the Brazilian side, what we found out. For instance, if the Brazilian side doesn't consider permanent establishments as such, let's say a warehouse in Sao Paulo, but the German tax authorities do, then from the Brazilian side, it's domestic income of what happens there. For the German side, what is it? Is it domestic German or not? Or from the Brazilian side, I think I don't know what the Brazilian side would consider this, but we found out that there might be problems with the tax credit of Brazilian taxes in Germany. You know, especially if this is especially a case if, let's say, a Brazilian company would have a warehouse in Germany, then it would be under German law considered to be a permanent establishment, but under Brazilian law, it would still be considered as Brazilian income of the Brazilian company. But that would lead to this situation where in Germany you could not credit the Brazilian tax, because under German law it's not considered to be a foreign tax, but it's considered to be a German tax.
Yeah, thank you.
Yep.
So there's another question from Rodrigo. How the operations related to cryptocurrency mining, it could be framed in Brazilian law, could be a service or even a transaction.
Well, considering it's Brazilian, by the Brazilian perspective, I will answer it. Try to answer. It's a very controversial question. And Peter, please feel free to make your comments at the end. So the main issue regarding cryptocurrency mining is that we have to first establish which protocol we are analyzing. So let's take Bitcoin and examples. given that we are talking about cryptocurrency mining. We know Bitcoin, when we say mining, is that because it's protocol, it's proof of work. You have to use your hardware to solve a problem, a mathematical problem, and if you solve it in accordance to the previous operations, so it will have a coherency about all the transactions in the blockchain, you are rewarded. The thing is, how you are rewarded. When we talk about Bitcoin mining, we have two types of reward. We have the transaction fee that's paid by the parties involved in this transaction, and this transaction fee, there is an input and an output in the blockchain. We see Bitcoin, a share of Bitcoin, Satoshi is a share of Bitcoin. For example, if Vera sends Bitcoin to Peter and I am the miner, a little bit of this Bitcoin in this transaction would go to me as miner. And also the protocol gives another reward, the coin-based transaction. This coin-based transaction is not related to any of the parties. Who pays this reward would be the protocol itself. So it would be like generated when I mine this operation, it would be originally generated. It's not something that's related to the Bitcoin that Vera sent to Peter in our example here. So these would be some issues that should be dealt with the law. Okay, it's very important, but we don't have specific guidance. But my opinion, one of these Bitcoin rewards, and I believe would be the transaction fee, could be deemed as a service qualified as data processing. I'm processing some data related to this mathematical problem. So in this perspective, I would say that I'm rendering a service to Vera and Peter, even though I don't know them. I just know them by the information that is in the blockchain. So I don't know that XPTO, XPTO, for example, is Vera in blockchain. I just know that it exists, but I cannot say that I know it's related to Vera, at least at the moment. Okay, so we have this. We can classify this as a service. We can classify this as data processing, in my view. But we have this very important issue. I don't know the parties involved. I don't have the identification of the parties involved. Okay, Peter?
I can't say much about the Brazilian side, but okay. In Germany, for instance, that nobody in mining knows the other person, you know, or they are unknown. For instance, that from my perspective leads to the situation that, for instance, you can't have a VAT relevant transaction, for instance. Whether you can have an income an income for income tax purposes is another question. Therefore, not necessarily you have to know the other parties involved. There, I think it's only of interest whether it can be deemed as business and trade income or not, or you act as a private individual, because mining could be done by a private individual as well. It does it once and never again, you know. So, but if somebody does it on a permanent basis, probably that would be income from trade and business.
Okay, there are no other questions. So thank you very much, Eduardo and Peter, for your good presentation and the discussion. So we want to make a little break of 10 minutes to take a coffee. So see you back in 20 past 4 for Germany and 20 past 12, I think, in Brazil. 4 hours.
Yes.
11.
Yeah, 11. 20. Thank you. 20 past 11.
5 hours.
5 hours. Ah, yes, they changed the time. So see you back in 10 minutes, and we will start then with the panel number 5.
Vera, bleibst du noch einen Moment drin?
Ja, sowieso.
Eigentlich nur eine Frage. Übernimmst du das, solange Marco offline ist?
Ja, mache ich.
Gut, war mir eben vorher nicht so klar. Ich habe versucht, dir eine Chat zu schicken, aber irgendwo kriege ich das nicht hin, weiß nicht, welchen Button ich drücken muss.
Ja, ich übernehme das, allerdings ist das nächste Panel unseres.
Ja, aber kannst du trotzdem, ne?
Ich kann es trotzdem.
Kannst ja die
Genau.
Fragen gut beantworten.
Genau, ich kann die Fragen beantworten. Das machen wir.
Ja.
Okay.
Vielleicht mache ich das dann, wenn du fertig bist mit der Präsentation, mache ich kurz das Dankeschön und dann übernimmst du die Fragen wieder.
Ja, ach, ja, wie du willst.
Machen wir das so, ne?
Wie es passt. Wunderbar.
Okay.
Alles klar.
Gut, bis gleich.
Bis gleich.
Thank you. Welcome back to work. Hope you enjoyed our virtual coffee. I now invite the speakers, Roberto Biava and Vera de Hessele, to start the presentation of panel 5. So, Vera, can you begin? Thank you.
Yes, thank you. I will share my screen. So, let's start our presentation. We thank all members of the Brazilian and the German group for the work on tax and environment. So, Roberto? Roberto, he's free to speak.
Oh, yes. Good afternoon for all. And in the next 20 minutes, we want to present some aspects of environment taxation in the two countries, Brazil and Germany. We start with a short introduction, then report on the experiences from Germany and Brazil, and then give an outlook on what can be improved. After that, we are looking forward to a fruitful discussion.
So, thank you. I will start. Environmental and climate protection enjoys a high priority in Germany and Brazil. In addition to fees, contribution, requirements, and prohibition, environmental protection also includes the levying of taxes. Both countries have taxes that are based on environmental protection criteria. In detail, they differ significantly. Environmental taxation presents an important step by acting as an incentive for economic agents to be motivated to reduce the harmful effects on the environmental caused by their activities, and thus influence their behavior to meet environmental policy objectives. Both countries lack a uniform system or a system that takes environmental criteria into account in a structured manner in all individual tax laws. In the following, we summarize the individual results from Germany and Brazil. So we start with environmental taxes in Brazil. Please, Roberto, it's yours.
Well, let's talk some words about environment tax in Brazil. Well, the income tax of individuals and companies in Brazil offers few tax incentives aimed at protection of the environment, but we have some examples in income tax, like deduction of amounts spent on reforestation, the program Rota 2030, a program aimed at the automotive chain with the objective of supporting technological development, vehicle safety, environment protection, energy efficiency, and the quality of automobiles, which provides a reduction of up to 15.3% in the amount spent on R&D in the income tax of companies. But in Brazil, indirect consumption taxes has more example of incentive for environmentally friendly behavior. Let's talk about some examples. At IPI, we have also the program Rota 2030. It allows EPI by up 2% for vehicles with greater energy efficient. And there are other IPI rate reduction for the so-called white goods, like household appliance, such as refrigerator, freezer, etc.
with low energy consumption. In the municipalities, the tax about services, we have the green ESS incentives, and we highlight some example like installation, operation, and maintenance service for solar energy system, new buildings and buildings renovation that comply with environment criteria, such as the use of rainwater harvesting, water reuse, solar water heating, solar electric heating systems, and the use of sustainable materials in construction. Let's talk about taxation on vehicles, fuels, and electric energy, because we have some effects to protect the environment in Brazil. Well, in Brazil, there is neither a tax on pollution generation, nor a tax aimed at protecting the environment. But there are several taxes in which the rate or the way the tax is applied generates effects similar to those that could be obtained by a tax intended to protect the environment. In some states, we have the PVA, that is the motor vehicle ownership taxation, that has differentiated rates according to the type of fuel used in vehicle. In the state of São Paulo, the IPVA rate for gasoline-powered cars is 4%, and the rate for gas or ethanol-powered cars is 3% less. And the vehicle in fuel taxation in Brazil, data from April 21, gasoline taxation has ICMS rates between 25% and 34%, ethanol between 30.3% and 30%, and natural gas between 12% and 28%. So gasoline has more taxation. At the federal level, also gasoline taxation, PIS, COFINS, CID is higher, and the ethanol and natural gas is lower. Also, property and land tax have some options of environment incentives. We have in Brazil some municipalities that we studied, some municipalities. Celia Carvalho did a good study about this in our article. We have the Green IPTU, that the object is to grant discounts on the amount of this tax charged to taxpayer who makes improvement to their property oriented to the sustainable use of natural resources. As examples of improvements, we could mention the implementation of a system to collect and use rainwater, a solar hydraulic heating system, implementation of a solar electrical system photovoltaic, construction with sustainable materials, ecological sidewalks, areas that allow the permeability of the soil, use of passive energy system for use of wide energy, separation of solid residues, etc. About ITR, federal constitution provides for the state regulation of rural property through the possibility of using progressive tax rates according to do not have rational utilization and they use natural resources inappropriately or disrespect to the environment and labor standards, etc. Some examples about the ITR exemption. Related to planted forests, to permanent preservation and legal reserves area, to areas of ecological interest for the protection of ecosystems, to areas under an environment easement regime, to areas covered by native, primary or secondary forest in medium or advantageous stages of regeneration. And we have a financial mechanism in the ICMS. We have the ecological ICMS. The ecological ICMS is actually a portion of the state's revenue distribution passed on to municipalities that meet the legal norms of environment protection. We have conservation units, power springs, garbage collection, environment sanitation, preserve the local historical heritage, indigenous reserve, and so on. Depends on the state, the law. Thanks.
So, in the German Basic Law, there is an objective to be found, namely environmental protection. It's in our Article 20A of the German Basic Law. The state, also the responsibility of future generation, protects the natural foundation on life and animals within the framework of the constitutional order by means of legislation and in accordance with the law by means of executive power and the administration of justice. Environmental taxes do not exist as an autonomous tax type in Germany, and it's very difficult, it's not possible, but are rather present at the steering effect in indirect taxes, for example, for consumption taxes, and regulation with environmental incentives in direct taxes, for example, in income tax, corporate income tax, and also in trade tax. This illustration here shows that consumption taxes such as energy, electricity, motor vehicle, and aviation tax contribute significantly to the generation of tax revenue, especially if compared with the personal income and the value-added tax at the two largest taxes in Germany. All in all, we count about more or less 58 billion euro green indirect taxes per year, of which are 40 billion euro energy tax, 7 billion euro electricity tax, 9.4 billion euro motor vehicle tax, 175 euro aviation tax. However, energy and aviation tax were significantly lower in 2020, due of the COVID impacts. It can also be seen that due to the scope of income tax, it's precisely in these three taxes that the high revenues can be generated, taking environmental consideration into account. As indirect taxes, the energy and electricity tax are harmonized in the European level by the Energy Taxation Directive, which determines the taxable energy products and the minimum tax rates. The directive is currently under revision within the Green Deal initiative of the European Commission. One of the significant changes is that the tax rate shall be raised on the net calorific value of the energy products instead of the quantity of the energy products used. The motor vehicle tax on passengers' car has been primarily based on the vehicle's carbon dioxide, in German CO2, rating instead of its pollution class under the emission standards. The aviation tax, also a tax called the ticket tax, is levied exclusively on the commercial transport of persons by air carriers from the airport in Germany. No tax imposed on transit flights, postal and freight transportation are not taxed. In value-added tax, there are benefits applies for services from non-profit organization and transportation by train and local public transport. The reduced tax rate of 7% instead of 19% is only granted if the distance is under 50 kilometers. However, there are no further benefits for environmental behavior, especially for the purchase of use of electric or hybrid cars or bicycles, as they were introduced for income tax as of the year 2020. This is a little bit surprising because the value-added tax has a high potential to influence consumer behavior. In the German fiscal code, the Abgabenordnung, it's part of a general tax law which serves as an umbrella for individual tax law and contains special regulation with environmental aspects with its not-profit regulation. According to its section 52, the advancement of environmental protection, nature conservation, landscape conservation, coastal and flood protection is to be recognized as promotion of the general public. Non-profit organizations are exempt from corporate income tax and from trade tax, according to section 3.6 in the Trade Tax Act. As long as they do not run as a commercial business, or if they, so the revenue including sales tax from commercial operation does not exceed 45,000 euro per year. However, the all or nothing principle applies to the relief, which means it is aimed primarily at 100% non-profit organization. Private companies that only partially carry out environmentally protective activities are not covered in that. In addition, however, there are individual regulation on environmentally friendly behavior in the individual tax law on direct taxation, for example, on the use of environmentally friendly public transport. Furthermore, a reduction of the tax base is granted for personnel and company donations made to a non-profit organization. Income taxation provides for a variety of provisions on mobility which necessarily have effects on the environment. The taxation of the private use of a company car by employees or businessmen may be beneficially low and thus encourage the increased use of a car, so it is bad for the environment. Moreover, business owners are encouraged to buy electric vehicles and they are granted a depreciation which amounts to 50% of the acquisition costs in the first year. There are other reductions for energy-related renovations, block type terminal power stations, and also solar plants. So we are coming to the improvement, and Roberto, it's yours.
Oh, thank you, Professor Vera. Let's talk about improvements, né? Improvements now in Brazil. As part of the debate between Brazil and Germany, the group suggests new ideas for improvement Brazilian tax legislation, considering environment aspects. First, create accelerated depreciation option in the income tax for fixed assets with ecological potential, né? Special for corporate tax. Create also tax credits for the industrial recycling chain, especially for VAT type taxes, né? In Brazil, we have ICMS, IPI, Fiscal Fees, okay? So it's necessary tax credits for recycling. Creation of a national sustainability status in municipal service taxation, ESS and IPTU, because only some municipalities have the mechanism for environment incentives. The extension, it's important this point, the extension of tax immunity from educational and social assistance institutions to all environmental protection entities. Né? So we think it's necessary an ampliation of the tax immunity in Brazil for our environment protection entities. Encourage the use of sustainable ITR by rural communities and educational institutions. Né? The tax, né, in rural property is a pressure tool when it comes to preserve and protect, né, the environment. And the last suggestion is to encourage municipalities to adopt the tax credit for investment in sustainability. Né? The program, it's necessary, we think, né, to encourage the adoption of building, né, to sustainability. Né? And resilience measures by granting these properties a green credit certification, né, of active debit. Okay, thanks.
Okay, for the German part, I will explain some improvements our group found, especially in the value-added tax. The value-added tax can have a significant effect by lowering the price for the taxpayer. So it is therefore surprising that the German legislator has up to now neglected the potential except for granting the reduced tax rate for train tickets, regardless of the distance. In similar, income taxes offer even more possibilities for including environmental aspects by granting tax benefits for the use of certain means and technologies, for example, with higher depreciation. While up to now, only selective tax benefits are granted. In addition, environmental protection through non-profit law could be improved if the tax privileges were aligned with the public welfare principles and environmental protection. So, this was a brief presentation of our findings, and we welcome to opinions or your questions. Thank you.
Congratulations to Roberto Biava and Vera de Hesslich for the very interesting presentation. Now, let's see what are the questions on the chat. I see here that Mr. Rodrigo Zovka, the question is there any improvement in the progressivity of the ITR that can be made on Brazilian law? Roberto, can you answer this?
Okay. Well, as we said in the presentation, in Brazil, these taxes is about rural property, rural property. So we have now in the Constitution the possibility of the progressivity when the rural property don't make your social responsibility, and also it is included the aspects of ecological aspects. And also we have some deductions, like that we mentioned in the presentation, some areas with forests that we can reduce the tax. But we think it's necessary to study more this tax. In this article, we do a great view, a panorama about the legislation. So we need also to study the details to detect another improvement. I think.
Thank you, Roberto. I see here another question from Mariane Maciel. How would work the creation of the recycling credits in the Brazil context?
Well,
I think for Roberto.
It's for Brazil also. Mariane, this is a great problem in the Brazilian consumption tax, because sometimes we have a lot of industries that works with recycling, and then sometimes the industry buys a lot of material, used material, and it's not possible to do the credits in the VAT taxes like ICMS, PIS, COFINS, IPI. So it's necessary to create a detailed legislation. In Brazil, we have some difficulties because ICMS, we have 27 legislation, but I think that in the federal level, like PIS, COFINS, it will be more easier to construct a good legislation about recycling credits. There is a lot of demand in this way, and it's necessary to do project legislation at the Congress, studying with academic and with industry also a good solution.
Thank you, Roberto. So I don't see any other questions in the chat. If this is the case, I will now then invite the speakers, Andrea Macito and Karen Gunberg, to start the presentation of Panel 6. Panel 6 deals with tax litigation in both countries. So, can you start, please, Andrea?
Good morning for the Brazilians. Good afternoon for the Germans. I thank all the group, all the attendees of this webinar on behalf of Professors Frotscher, Vera, Marco, and Ana Cláudia. I am Andrea, like Marco has just said. Karen and I, we were the ones elected by this group of tax litigation to speak about it. And in order to start explaining the tax litigation environment in Brazil, I think that there is the need to understand three things. You have already understood so far, but we need to highlight three things. The first thing, as you were able to understand from the previous presentations, the Brazilian tax system is very complex. There are several taxes, several jurisdictions, non-cumulative systems, etc. The second thing you need to understand is that the issuance of tax assessments here in Brazil is mandatory for the tax authorities. There is still no room for a prior negotiation between tax authorities and taxpayers seeking tax compliance and preventing tax litigiousness. The third thing is that traditionally we have this litigiousness culture. Our culture is of opposition rather than collaboration between taxpayers and tax authorities. But these traditional methods, they do not pay off, as we can see here. The equation that is summarized in this PowerPoint presentation is a scenario of high litigiousness, high costs, and low efficiency. The data herein shows that the tax enforcement in Brazil is only made in judicial courts, rather different from what Karen will explain for the German scenario. This procedure happens only after the administrative stage of dispute is finished, what takes approximately 4 years. And then after the tax enforcement is filed before the judiciary, it takes a few more years debating guarantees needed in order to satisfy the tax debts, other than the defenses and evidence stage, etc. So tax enforcement can take an average of 9 years to end and represent most of the cases in the judiciary right now. It means approximately 30 million cases at this point in time. So after more than 10 years in total of discussing, a recovery of only 1% of tax debts is what we see here by the government. And we also see a high cost of the judiciary itself. So that's why I meant in the beginning that it seems that the traditional methods are not paying off. So we need to open our mind to new instruments, as we will speak during our presentation. So now let's see how it works in Germany. Please, Karin.
Yes, thanks, Andrea. When we look at the tax enforcement in Germany, we have contrary look, because in Germany the tax enforcement is generally made out of court. We have an administrative tax enforcement, and we have the tax authorities who are competent when it comes to pledges or constrictions or the like. So if you file a tax return, you have to pay the amount due 1 month after notification of this of the tax assessment. So in general, we have an average duration of 30 days, and you are charged with late payment surcharges, for example, and this is being regulated. And when we look at the statistics published from the German Federal Ministry of Finance, we have a look at the in-court appeal procedure. So only about 2% of settled appeals led to a lawsuit, and that's the biggest contrast, I think, when we compare it with what Andrea explained. And about 13% of the appeals required an appeal decision in 2018. So when you look at this, you say, wow, that's rather complex in Brazil, and what are the possibilities of the taxpayer to get more comfort when it comes to the tax litigation before tax notification. And tax compliance is an attempt to solve this. And when we talk of tax compliance, the good news is that it's the same definition in Brazil as well as in Germany. But in Germany, as Andrea explained partly, we have a more trust-based relationship between the taxpayer and the tax authorities. And since 2016, the taxpayer has the possibility to voluntarily implement a tax compliance management system. We do not have any rating on the basis of a tax CMS of the taxpayer, and nevertheless, an appropriate as well as effective tax CMS can provide the taxpayer with advantages, because this may lead the tax authorities, when there is a fault in a filed tax return, that they say, oh, he did not do it on purpose, and that's a possibility then. And the tax authorities indeed intend to include internal company tax control systems in external tax audits in the future. There has been some progress with respect to this, and when this actually happens, we will see that there is a significant increase when it comes to the importance of tax CMS. But now I hand over to Andrea, and she will explain how it works in Brazil?
Yeah, in Brazil, we do have a very different approach in tax compliance as well. Here, we do not have a tax compliance based in trust, but rather a rationale of carrots and sticks, meaning that we are creating some motivation in one hand to stimulate tax compliance, such as more dialogue, but the focus on the other hand is still on penalization. So our current programs, to stimulate the compliance, they work on a taxpayer rating basis, meaning that if the taxpayer fulfills his obligation, if they provide tax authorities quality information, if they disclose adequately its assessments, if they have commercial relationships with other well-rated taxpayers, then this taxpayer will be better ranked and will benefit from that. If not, the taxpayers then threaten to be more inspected and punished by being bad ranked. So there is a discussion on whether these rankings, these ratings could be public or not, but as much disclosure they get, they are certainly more efficient to its purposes. Here in slide 4, what we can see is an illustration of our tax compliance model, showing that here in Brazil, we have a top-down enforcement of tax obligations. We reinforce that there is no dialogue or space for mistakes correction upfront to the assessment, ending up increasing litigation.
And when we talk about Germany, we can look at the slippery slope model by Erich Kirchler. And I would like to give you one example with respect to that. We learned from our working group, when in Brazil you have a tax audit, the inspector files an audit document and informs the taxpayer about his findings. In Germany, the taxpayer has the possibility to have a final meeting during tax audits, and this indeed is showing that there is more cooperation and dialogue between the taxpayer and the tax authorities. So in the last years, there has been some modernization of the taxation procedure in Germany. And when you're interested in getting to know it in detail, you will find it in the German Fiscal Code in the section 155 in combination with section 88. And in Germany, we have an automated assessment of tax, and among other things, it provides for an intensive audit by the tax inspector for a certain percentage of all tax returns, but on a random basis. So how do the tax authorities get this data? To some part, the information is provided by the taxpayer itself in his current tax return. But the tax authority, by means of data exchange, have other possibilities to get information. So, for instance, from insurances or banks, they get data that they can validate with the data that the taxpayer has filed in his tax return. And the aim of this is, of course, to increase the rate of fully automatically processed tax returns by means of using risk management systems. And the tax authorities have difficulties to get personnel and staff, and so there's this is a possibility to reduce personnel. And it also enables the tax authorities to focus on suspicious as well as conspicuous cases. For the taxpayer, there is no transparency with respect to this procedure. The risk management system is not available for the public. And there are certain algorithms on which the automatic risk management system works. So you can see whether the information conceals risks or not. So what are our suggestions when we compared the approaches of the two countries? In Germany, we thought it is essential and crucial to be more digitized, and that the German tax administration should work hard so that the taxpayer only files one tax return and has only one external audit. We have other neighboring countries like Austria where things are being dealt with in a more digitized way. And it would be beneficial if the tax authorities and the taxpayers could communicate with each other digitally. We would also suggest that in the case that a company has an appropriate and effective tax CMS, this should provide him with some benefits with regard to tax audits, and that tax audits could be carried out quicker and more efficiently. And that's what I can say for Germany, and I will hand over to Andrea.
On the Brazilian side, we actually need to evolve in the development of trust, as we were saying, and learn with the German system on this behalf. In my perspective, using the technology we have currently implemented to disclose clear policy guidelines and expectations from the tax authorities that are actually clear for the taxpayers to understand, that can monitor the taxpayers, that can even respect privacy and protect the sensitive information. And all of these combined would enable a more efficient collection, would cause a higher level of trust and compliance in order to prevent, at the end of the day, tax litigation, which is our main topic here. But while we are not successful on preventing tax litigation, I will explain how the traditional methods of tax disputes in Brazil work. They are segregated in disputes in the administrative sphere, stage of dispute, and judicial sphere of dispute, both counting with three level of discussions, so they admit appeals. Both have public judgments. In both, we also have the opportunity to provide oral arguments. Either the taxpayers and the tax authorities can provide oral arguments, and can also request evidence to be presented therein. And in the recent events of COVID, both have developed very well the virtual courts and the telepresential trials. So this has worked very well here in Brazil. And I see that this is a difference between the German model that can, on the other hand, be learned with Brazil as well. The main difference between the administrative and the judicial spheres of dispute is that in the administrative sphere, the courts are linked to the finance ministry. They count on parity judges representing both taxpayers and tax authorities. So because of that link to the finance ministry, if the tax authorities lose the dispute in the administrative sphere, they cannot ask for a review in the judiciary. Otherwise, taxpayers can. If taxpayers lose in the administrative dispute, they can take the matter to the review of the judiciary. This is currently under review as per discussions that we are having on casting vote in this administrative stage of dispute. But at this point in time, only taxpayers can actually take the review of the judiciary, can take the tax matter to the review of the judiciary. So mainly the tax authorities, they only go to the judiciary to collect by means of the tax enforcement that I started explaining at the beginning of our presentation. But tax authorities can also reach the judiciary requesting help to prevent taxpayers to get rid of their patrimony, of their assets. So that there are some instruments, procedural instruments that the judiciary can grant some caution to the tax authorities in case taxpayers are trying to get rid of patrimony. Another big difference is that taxpayers, they do not have to guarantee the tax debts to challenge it in the administrative sphere of dispute. On the other hand, when in the judiciary, exception made for the situations that the taxpayers get an injunction preventing this need, then the taxpayer would need to post a guarantee. This would be necessary as to enable certificate of good standing issuance, which is a document needed for overall transactions and business development in the country.
So when we look at the administrative and judicial tax disputes in Germany, I would like to say with respect to the administrative procedure that we have an appeal procedure called Einspruchsverfahren, and it is very important for you to take with you that this administrative procedure is a no-court procedure. And in contrast to this, we have the judicial tax disputes, and this is a specialized branch of jurisdiction with a specific national code for court proceedings. We have 2 levels with independent and specialized judges, and it is the aim to provide an effective judicial protection in an adequate time. There is only one party who can file an action, and this is the taxpayer. He can file action against the tax authority, and when it comes to court, there is a complete review. We look at the law and the facts, and the taxpayer may as well present new facts and evidences. And we do have a very great variety and flexibility as well of instruments that can be used during this court procedure. So, for example, we have a consultation meeting, we have an Erörterungstermin, or we have a dispute resolution on basis of a mutual agreement. So, as you can see from this, a formal judgment is not always required. And as Andrea explained, for Brazil, we have virtual courts via video conference as well. So now I will hand over to Andrea, and she will explain the alternative dispute resolution.
Thank you, Karen. Well, in connection to all we have discussed so far, we reached this idea of adopting alternative dispute resolution methods in tax in order to reach some new results. So we need to act differently to achieve better results than the 1% that we have referred in the data in the beginning of the presentation. ADR methods, which are alternative dispute resolution methods, they seem to be this way out, presenting benefits such as speed for decision making, causing like this good, let's say like this good cycle, bringing more legal security, complying with best practices, especially now that Brazilian has recently entered the OECD. And all this is grounded in a gradual, like I said, changing mindset, mainly pulled by the federal government and legislation that started to make this path in 2015, as per the addition of the new civil procedural code, and that is applicable also to tax, and have evolved, especially from 2019 on, as we will see. 2019 was important because we had the tax transaction finally regulated here in Brazil in the federal level. So we see here a proper background nowadays for a multi-door system. These two blue doors, these initial blue doors, they show the traditional methods used for the tax disputes that I have just explained. The tax transaction door has been opened up mainly from 2019 on and can still be improved, is under construction, is being built. And all these three doors, and especially the ones in the middle, the judicial and the transaction, can be and are being combined with proceeding legal agreements. And there's finally the arbitration door, which is still not open, but we are trying to. There are 4 bills of law in Congress with this intent, as we will summarize herein. Beginning with the proceeding legal agreement, I shall say that this was a great first step on ADRs brought in 2015, and its use is mainly concerned calculation of taxes, especially credits to be a certain amounts to be paid or reimbursed, which causes a lot of discussions between taxpayers and tax authorities. Also procedural deadlines that can be agreed on, such as time for evidence, for defense presentation, for providing guarantees, whether some litigation costs could be dismissed. These kind of things are able to be negotiated between these kind of agreements. And finally, for discussion of guarantees themselves, which is something very important to preserve the right of the tax authorities to receive the taxpayers at the end, receive the tax at the end of a dispute with the taxpayers between a tax enforcement lawsuit. So guarantees acceptance, evaluation, release, replacement. When you have, let's say, like stocks that are pledged and these stocks are much more valuated, then they can be sold to put money, and money can be used upfront by the tax authorities. So this can be combined in a proceeding legal agreement. But I shall say that there is also room for other kinds of agreements if they do not prescribe any kind of pecuniary penalties and disposal of rights or imposition of charges to the federal union. The tax transaction, for its turn, is prescribed for a long time, since '66 in the National Tax Code, as a hypothesis. But its practical use, especially in the federal level, which concentrates the higher amounts under discussion, gained force with its regulation only in 2019. So almost approximately 50 years after its prescription in the National Tax Code. Its focus here, its rationale, it's to enable a return of the taxpayers to tax compliance, especially for those in difficulty, meaning that taxpayers that are ranked, the taxpayers and the debts that are ranked at C and D ratings, which means that the tax authorities have a very low expectation of recovering these credits, so that the tax transaction would enable benefits such as discounts, flexible payments, installments, etc., to actually enable the tax compliance for those in difficulty. In regard to tax arbitration, as I have anticipated, it is still not a reality, but there are these 4 bills of laws that I summarize here in Congress. Some prescribe changes in the National Tax Code, which is more difficult, politically speaking, to be admitted, to be approved, and others just ordinary rulings, so they have specific applicability. And we are still in Brazil overcoming some of the challenges for these methods, seeking the arbitration as another option, another door for solving tax disputes. And this arbitration, this means of solving disputes would also be by a third party. So it means that no concessions are made between the parties, that only agree with the choice of a private court for the judgment. So this is something different than a tax transaction, let's say, okay? So in order to close this panel, I summarize this last slide as showing there is an actual need for doing something different in Brazil, and innovation of how to do things and litigating in tax seems to be the right path, and we can do it combining development of compliance rules, changing paradigm from opposition to dialogue, implementation of trust, a multi-door system. So these are all important items to be combined. And I am sure that this will put Brazil in a better position in tax litigation, being inspired by models such as the German in compliance, dialogue prior to assessment and trust, such as Portugal by development of tax arbitration in a context of economic crisis of the government. And finally, reaching the so desired confirmation on tax treatment in a reasonable time, so it does not represent a burden to business development and investment in the country. So I hereby thank you all, the group, the opportunity, passing on to Karen to provide her final remarks on the German side. Thank you.
Thanks a lot, Andrea. Well, you might wonder, Andrea explained very detailed about ADR in Brazil. In Germany, we do not have a discussion with respect to ADR for tax, because we have some regulation in the tax law, and therefore we do not have a need. And I think this demonstrates very visibly that due to the fact that in Germany we have a dialogue between the taxpayers and the tax authorities, we have more possibilities to settle things up front, the beginning of a formal dispute. So we think that in Germany this is a more efficient method to solve tax disputes and to achieve finally tax compliance. And with this remark, I want to thank you for your attention, and Andrea and I are looking forward to having a lively discussion. Thank you.
So thank you, Andrea and Karin. So we have some questions in the chat. So the first question is from Mariana Maciel. Is there some project to establish a trust-based relationship between taxpayer and tax administration in Brazil? What are the obstacles to implement this?
Well, the obstacles are mainly, as I said, the obligation of tax authorities to issue the assessment. So it's very difficult for tax authorities to have room, and taxpayers have room to speak, to explain, and to try to submit its conduct to what the law prescribes. So mainly it starts with the assessment. So this is very difficult, because when you do this, when the tax authorities make the assessment, the next step will be presenting the defense. So you already start the litigation in the administrative phase sphere mainly. So this is a very important obstacle. In regard to projects that we have here, we have some programs that are the ones that I mentioned with the ratings according to the behavior of the taxpayer. So I wouldn't say it's actually a trust-based relationship, but rather a monitoring of how the taxpayer behaves. But I think that this should and could evolve to a much more trust-based, inspired on the German model.
Thank you, Andrea. Then there's a question for Karin from Caio de Sousa Leão. How does it work in legal certainty in Germany, since each situation is treated individually, sorry.
Well, I try to answer this question. We have the legal certainty because we present the tax case to the tax authorities. However, each company might have this business situation you have to deal with, for instance, for VAT. And then, I have a section which deals with services from B2B, and it's the same for the service German-wide. So I don't know if that's the essence of the question. Otherwise, I would like to invite Carl to contact me via LinkedIn, and maybe we can discuss this further when I did not get the question right. I'm sorry for that.
Okay, thank you, Karin. And there's another question, I think also for you. It's from Enrique Lopez. In Germany, the taxpayer receives notification prior to the initiation of the tax audit.
Well, I would like to explain the procedure with respect to that more detailed. When a company files a tax return, for example, for the years 2018 to 20, for each of the years he gets a tax notification, a tax assessment. And then the tax authorities decide that they want to have a tax audit, and then the taxpayer gets an information written that there is a certain date when the tax audit starts, and then there's the tax inspector who looks through the files, and in case that he has some things that he examines, which then he will present corrected notifications. So he receives another notification, and he does not always only get a notification after the tax audit, but upfront as well.
Thank you, Karin. And there's another question for Andrea from Larissa Almeida. Regarding the dialogue between taxpayer and tax administration, do you think that the PL 70/2020 does a good job starting this conversation, or we need more specific legislation?
Thank you for your question, Larissa. Larissa refers to Bill of Law 17 of this year of 2022 that changes the national tax code in order to prescribe the possibility of taxpayers and tax authorities enter into tax arbitration solution. This is a very short prescription, and it actually needs to have further regulation and detailed regulation by means of an ordinary law, not by a supplementary law as it is. But I think this is an important marco, as an important step, because as you prescribe tax arbitration in the national tax code, you grant security for both parties, especially for the tax agents that are very concerned on having responsibility attributed to him in his function, in the development of his function, and also to guarantee for the taxpayer that he will have the suspension of the tax credit collectability while he's litigating in a tax arbitration.
Okay, thank you. So I think there are no further questions. Thank you, Andrea and Karin. And now we go ahead to our panel number 7, our last panel, basic issues of tax system in Brazil and Germany. And the speakers are Roberto Condornis Leite Pereira, Nina Schmidt, and Joel Kreklau.
Yes, I hope you can see my screen now.
Yes.
And yes, and you can hear it perfect. Okay, good afternoon and good evening, everyone. My name is Nina Schmidt, and I am, together with all the other members presented in the table you can see on the slide, part of the working group that has analyzed and compared several basic issues of the Brazilian and the German tax systems, such as statistic data on taxes, the organization of tax offices and tax courts, certain EU tax issues, etc. However, we have jointly agreed to pick 2 of these basic issues, which we consider to be the most current, and present our main findings of these 2 topics to you today. The first topic is about the German and the Brazilian anti-tax avoidance rules, and the other topic focuses on potential changes in tax rules in the coming years. So let us start with the German anti-tax avoidance rules. One of the main features is that Germany has a general anti-avoidance rule, which covers all types of taxes and which may be applicable if the taxpayer uses a tax planning that, although generally legal, is contrary to the purpose of the law, and therefore it is considered an inappropriate legal arrangement for which there are no remarkable non-tax related reasons such as economic reasons. However, the GAR is only applied if none of the more specific anti-avoidance rules are applicable. And German tax law contains a lot of special anti-tax avoidance rules, which are designed to neutralize tax outcomes arising from the implementation of inappropriate tax structures in very specific cases. Some examples are the interest or royalty limitation rules, the CFC rules in case of controlled foreign corporations.
Recording in progress.
Rules against hybrid mismatches, or the transfer pricing rules, as you've heard on the other panel before. These special anti-avoidance rules are largely aligned with the recommendations of the BEPS project of the OECD and the European Anti-Tax Avoidance Directive. In this context, it should be mentioned that in December 2021, so in the last year, the European Commission has published a proposal for the Anti-Tax Avoidance Directive 3, which is also known as ATAD 3. And this directive shall aim to discourage the use of European shell companies, which have no or not sufficient substance. It is intended that the directive will become effective in 2024, but certain gateway criteria of the proposed substance test look back on the information of the preceding 2 years, so that relevant taxpayers should make sure to keep sufficient documentation or evidence on hand already from this year, 2022 on. And also in the future, the substance test might be extended to non-European companies. So this matter should urgently be observed. And apart from the German GAR and DARS implemented in national law, Germany has also concluded on special anti-avoidance rules in some double taxation agreements. For example, the DTA between Germany and Poland contains a switch-over clause, which is connected to an activity proviso, and the agreement with the United States provides a limitation on benefit clause, for example. Germany also takes part in the multilateral instrument, or the so-called MLI. And once this has been notified by Germany in relation to some specific double taxation agreements, a principal purpose test may come into force to prevent tax avoidance in relation to the relevant countries. And in addition, which is very important, Germany's national law contains several treaty overrides, such as subject to tax or switch-over rules, as well as the rules against treaty shopping, which basically mean that under certain conditions, these rules may deny a tax exemption or a reduced withholding tax rate under the provisions of a DTA, and only apply these beneficial DTA rules if the taxpayer provides sufficient evidence to prove that, for example, the taxation in the other country, or if the taxpayer submits certain applications to the German tax authority. And yeah, as you may realize, the problem with these treaty override rules is that these regulations are not embedded in the relevant DTA. You cannot see them from the DTA, but only from Germany's national tax law. So the taxpayer cannot really, in any case, rely on the favorable tax treatment under a DTA. So it is highly recommended to examine each individual case in more detail from a German perspective. Yeah, Doris, I'm passing on to you. Doris?
Thank you. I needed the host to let me unmute. Thank you very much. So thank you, Nina. I would like to just quickly thank Professor Tumi for inviting me to take part in this amazing initiative. It's nice when someone you admire invites you to these kinds of projects. Thank the amazing Group A for all our exchanges during the last year and semester, and congratulate the organization of the event. I'd like to do this in the person of Professor Marco Antonio Veríssimo. So just to move forward with the Brazilian GAR and SAR rules. Nina, I think the slides, can you share?
Oh, I'm sorry. Oh. Here you go.
So thank you very much. I just wanted to say thank you quickly. The Brazilian GAR rule, it is out of local law in the National Tax Code. It has a focus on the concealment of the occurrence of a tax triggering event or constitutive elements of a tax obligation. The procedures for this were supposed to be established through a specific law, as states the Brazilian National Tax Code. This law has not yet been enacted, but it did not stop the Brazilian tax authorities and tax courts of moving forward in the scrutiny of tax planning and tax structuring transactions. This law was, the article of the National Tax Code has recently been decided as constitutional by the Supreme Court. It is a recent ruling, but the consequence of the lack of procedures is that there's no uncontroversial limits in a tax planning transactions. And this lack of uncontroversial limits leads to the need of a case-by-case analysis. So basically, tax authorities use the GAR rule. It is constitutional, but a case-by-case analysis of the transaction should be done. Brazil also has the SARs. We have a black list and a gray list indicating low tax jurisdictions and privileged tax regimes. Remittances to these countries or specific companies, they require greater scrutiny by tax authorities. We also have thin cap rules, transfer pricing, which has been broadly discussed in the previous panels. CFCs, our CFC rules are much broader than the European Union's. Note that in transactions with blacklisted and graylisted jurisdictions, they have stricter thin caps, stricter CFCs as well, and mandatory transfer pricing. Low tax jurisdictions may also have higher rates on withholding tax remittance. And some states have specific provisions regarding their state VAT. So like São Paulo and Rio de Janeiro. For example, Rio de Janeiro focuses on the economic ends of the transaction. Now moving on to the GAR and Brazilian treaties. it is interesting to mention that Brazil is not has not signed the MLI. It has the LOB clause in a couple of older treaties, such as Trinidad and Tobago and Turkey from 2009 and 2011. These clauses are quite modest. In Trinidad and Tobago, we can see a mention to trusts, and in Turkey, a mention to specific residency requirements. More recent treaties are following the MLI. It is interesting to mention Israel because Israel has a very modern LOB and PPT clause from 2005. The protocol to Argentina, Russia, and Singapore and Switzerland are very recent, from 2007, 2018 onwards. They already follow MLI orientations for LOB and PPTs. Most of them have a focus on the satisfaction of the business purpose of the transaction by the tax authorities. And Singapore, it is interesting to mention the 183-day rule, which is usually used for individuals, but here it is also used for service permanent establishments. Another interesting treaty to mention is the one with the UAE. UAE is a blacklisted country for Brazilian tax purposes, and it has, as well as the PPT, specific additional limitations. For example, the effective tax rate that the taxpayer actually pays for in the UAE may be a deal breaker for treaty benefits. So from the Brazilian side, I believe this is a very short description, and so you can have an idea of GARs and SARs, both in local legislations and treaties. And I will hand it back to Nina to start our conclusions on the comparison for this subject.
Yeah, thank you, Doris. So during the project, we noticed that Germany and Brazil basically adopt or use the same rules to protect their own tax bases, so they have the same anti-avoidance rules. However, the design of these specific anti-avoidance rules vary considerably. And especially the German anti-avoidance rules are more aligned with the OECD recommendations, especially in the scope of the BEPS project, and as well as, of course, with the EU anti-tax avoidance directives. Whereas the Brazilian anti-avoidance rules, especially the GAR, which is not enacted by law, but was developed by a Brazilian case law, and the local law is more general and even more applied on a case-by-case basis.
Okay, so regarding the comparison on SARs, though most of the rules are basically the same, we can see that the country focuses are a little bit different. Germany has a very big focus on hybrid mismatches. And this is not a very big concern for Brazil. Our usual hybrids are out of legislation. So we have a focus, however, on the CFC rules, which, as I mentioned, are much broader and stricter than the European ones. And other SARs, as I mentioned, can be seen as well, transfer pricing, thin cap in Brazil. Regarding the treaties, we can see a clear trend of Germany as an OECD country following OECD and BEPS. However, even though Brazil is not yet an OECD member, it has active participation in BEPS, in the inclusive framework, etc. And though it has not signed the MLI trends can be seen in recent treaties, not only in the LOB and the PPT, which I have mentioned, but also in recent treaty protocols and treaty intentions also. So basically that's it. I will pass it now to Joel and Roberto for the next part of the group presentation. Thank you.
Yeah, our team also dealt with the possible reforms regarding taxation in Germany and in Brazil. And Yeah, for sure, one of the most important reforms is clearly the implementation of OECD Pillar 1 and Pillar 2 in Germany. Pillar 1 will scope multinational entities with a global turnover above 20 billion euros and a profitability above 10%. And according to that, according to a so-called amount A, the market jurisdictions shall participate of the worldwide income of those multinational entities. And that shall be brought into existence via a multilateral convention called MLC, which is basically a tax treaty between more than 2 countries. Yeah, Pillar 2, I guess most of us already heard about that, is the so-called minimum taxation with a tax rate of 15% for the worldwide income of also multinational entities. Multinational entities are in scope with a turnover above 750 million euros. And there shall apply a minimum tax rate of 15%. That shall be brought into law in 2022 in Germany to be effective in 2023. And that was suggested, and so there was a suggested European directive from the European Commission for the implementation of Pillar 2. Yeah, another important or interesting thing to look at is the EU Fair and Simple Taxation Initiative, which means the adoption of a new tax package within the European Union in an effort to ensure European tax policy supports Europe's economic recovery after the pandemic and its long-term growth. And the changes of this tax package are also likely to be adopted in Germany. The EU Green Deal Supporting Taxation Initiative is based on the Green Deal agreed in the European Union in the end of 2019, which means that the member states are supposed to reduce the greenhouse gases within the European Union until 2050 to 0 to get climate neutral as first continent in the world. And in connection with the Green Deal, the European Commission is currently revising the Energy Taxation Directive to change the way energy products are taxed in the European Union to ensure that it better reflects to our climate targets. BEFIT is another initiative also of the European Union, which tries to renew business taxation in Europe. By 2023, the European Commission will present a new framework for company taxation in the European Union, which will reduce administrative burdens, remove tax obstacles, and make conditions in the single market more business friendly. Yep, the DAC 07 is also a thing to look at in the proposal package released by the European Commission, of course. On amendments to the DAC was added a framework for the conduct of joint tax audits between 2 or more European member states. And the underlying aim is to mitigate the risk of double taxation within the European Union. And if we have a closer look at the German law, we could look at wealth taxation. During the last election in Germany, by the political leftist parties, the SPD, the Greens, and the lefts, they advertised in their manifesto for the wealth taxation. The wealth taxation is not levied on wealth since 1997 in Germany. And if the leftist parties might win the next election, it could be possible that the wealth taxation will be levied again in Germany. Another thing is that maybe the speculation period could be cancelled. According to current German tax law, it is possible to sell immovable property which is rented and not a business asset after 10 years without income tax. So it is just not taxable. It is not a taxable event if it was held by 10 years. But also the leftist parties wanted to change that Some of them had in their manifesto that it should be even cancelled so that it would always be taxable to sell immovable property in Germany. And some recommended to extend the speculation period from 10 to 15 years, which means that it would always be taxable within 15 years selling immovable property. Yeah, that were the changes or the possible reforms in Germany so far, and I would handle now to Roberto to go on with Brazil.
First of all, thank you very much. Good evening for the German, and good afternoon for the Brazilian. And it's an honor to be the last speaker of this event. So just to give you a brief discussion of what's happening in Brazil by now, we are facing many initiatives of tax reform domestically. So we are focusing on the reform of our consumption taxation as well as our income taxation. So from the consumption taxation perspective, as many groups have mentioned, we have currently a big Brazilian chaos, let's put in this word. So we have many taxes from different levels of our federation overlapping on the taxation of consumption of goods and provision of services. So we have today we have like a fiscal war, as the other groups have mentioned before, tax competition internally in Brazil regarding which transaction should be subject to each tax, or the ISMS, which is our VAT, the closest tax that we have to the VAT, or the ISS, which taxes services, which is not properly value added. So we have today like a very chaos, and this is a very sensitive point for that hampers Brazilian increasing of the economy. So we currently we are discussing. There is already some time. It is in our parliament a proposal of a creation of a better VAT that we have today. It will be dual. It will be both at the federal and the state and municipal level, and that was supposed to create to replace our origin-based taxation for destination-based taxation. That's supposed to make it easy to credit for input tax credits, and also to deliver all of the credits when the goods are exported. Those are our. This is under discussion. There is a lot of. There is a need of some political pressure, but this is still under discussion in a Brazilian Congress. From the income taxation perspective, we are now considering taxing dividends. Brazil, since 1995, does not tax dividends. The profits earned by the corporations are only taxed by the corporation itself. It's not taxed at the level of dividends of the shareholders. There is no withholding tax near the taxation of the shareholders on the dividends received. But now we are considering to change that. We are going to change that, but we should also do that as a compensation in order to offset another proposal, which is to decrease our corporate income tax, which is now around 34%. It should be decreased to something close to 26%, remembering that we have in the OECD level, the average is 20%. So Brazilian now must address this problem because it is a very competitive issue in the global market. We are also expecting to do some smaller adjustments in our tax legislation, which would be, for example, the taxation of investment funds. In fact, this is one of the big issues of our income taxation reform that we have today, and also other measures regarding the taxation of indirect capital gains, which is something that Federal Revenue Agency is trying to do in Brazil for a while, but there is not so much political strength for that. And also some changes in the personal income taxation. For example, the introduction of CFC rules for individuals. We only have CFC rules for corporations so far. So individuals, they enjoy deferral as a rule. Changes in the value of each bracket for the progressive tax rates. Our tax rates are progressive, but they could be more progressive, and that's an attempt to do that. And also the possibility to update the value of goods, and by only paying a different rate in a taxation of the update the goods from the book value to the market value. So without selling that, you may update and pay a reduced rate of income tax. Those are the proposals that are both under discussion in our Congress. The consumption taxation, it takes more efforts because it is an amendment to the Constitution, but the income taxation is just a federal law, so it is expected to be easy to pass. But so far, both are upheld, both are under discussion on our Congress. Next one, Nina, please. So, and in the international perspective, we are also facing many changes and the need to reform. For example, since 2019, Brazil has formally presented its will to become part of the OECD. Maybe it's even before, on 2017. But now, OECD welcomed Brazil to formally initiate its procedures for future accession. It has been recently on January 2022, and now it is expected to have some convergence with the OECD tax policies. So one example of that has been the work carried on jointly by the Federal Revenue Office in Brazil and the OECD regarding our transfer pricing rules. So our transfer pricing rules, as you know, they as have been mentioned by the other groups, it is strongly relied on presumptions, on presumed, on deemed fixed margins of profits and safe harbors. So our Brazilian transfer pricing rules are strongly relied on certainty and simplicity and lowering the costs of administration. So, but this has a cost, and the OECD pointed out the cost in a recent recent report about the transfer pricing rules in Brazil, that it would be to create opportunities for BEPS in some circumstances, and in other circumstances to allow some double taxation. So our rules are not that accurate as they are not as accurate as the OECD guidelines are supposed to be. So now some convergence is to be expected in Brazilian tax rule, maybe in a full convergence, but in a gradual manner, like developed by developing mechanisms for simplification and also lowering the cost of administration of our rules during the implementation process. But this is expected to happen if we really intend to ascend to the OECD. And also another challenge that is that we must expect maybe in the medium run or the long run is the Pillar 2. Brazil, as Doris has mentioned, has really strict CFC rules. There is no comparison with any other CFC rule in the world. We deny deferral in any kind of situation when you have the controlling company in Brazil. So it doesn't matter if the kind of income is active or passive. It doesn't matter the jurisdiction that it targets. If there is control, we target that income immediately. We do not allow deferral. So this, to a certain extent, this replaces an income inclusion rule. So is it suitable for the globe, for the Pillar 2? from the perspective of the income inclusion rule, that's a question that we must answer soonly. And also, we have Brazil is strongly relied on many rules that deny the deductibility of many payments made to foreign parties. So does it work as an anti-evasion payment rule? So this is another issue that we must consider, and also other rules that we have here that address specifically tax havens and preferential tax regimes. Next one. So as a conclusion, if we try to compare both movements of reform in Brazil and in Germany, we can see that in Germany, the possible reforms are more connected to the OECD and the EU, mainly to fulfill the ACAEFT and the other directives. While in Brazil, our reforms are much more targeted for the internal law, for the domestic law. We have many problems in our tax systems that must be addressed as a condition for GDP growth. And simplification in internal tax law is expected from the perspective of the taxation of consumption, but on the other hand, from the perspective of transfer pricing, if we are going to converge to the OECD guidelines, some complexities are expected to happen with transfer pricing legislation, and we are going surely, if we are going to ascend to the OECD, we are going surely to see some broad convergence of our transfer pricing rules with the OECD. So that's what we have in our horizon. Thank you very much.
Congratulations to Roberto, Nina, Joel, and Doris for the very good presentation. Now let's see if there is any question about this presentation. I don't see any. If this is the case, then now I will invite Professor Dr. Gerrit Frotscher to deliver the conclusions of our working group. And after the speech of Mr. Gerrit, I will announce the speech of the President of Associação Comercial de São Paulo, Mr. Alfredo Cotait Neto, that will conduct the closure of this event. Please, Mr. Gerrit.
Yeah, Marcos, thank you very much. Ladies and gentlemen, we have covered a wide variety of tax issues in a very limited time frame. Our study deals with much more aspects of the two tax systems. The full results of the study groups will be published in a booklet, both in Brazil and Germany, in the last quarter of this year. In the name of the steering committee, I would like to thank the presenters of today who guided us through two complicated tax systems. I also want to thank the numerous tax experts who have contributed to the work of the panels. Without the dedication of these experts, this project would not have been possible. Again, I would thank the Brazilian Institute of Direct Taxation and the City University of Applied Sciences in Bremen for their support. Without their help and their financial involvement, this study would not have been possible. Especially, and in addition, I would like to thank the Commercial Association of Sao Paulo for providing the technical organization of this conference, which was very helpful, and I think otherwise it would have not been possible to make such a conference over two continents. So thank you again. After 4 hours, we have now reached the end of the conference. We will continue with our work, so it is not the last word. Our study groups will continue to work, but for today, I want to close the conference. I wish you a nice day for Brazil and a nice evening for Germany. So see you and goodbye from my side. So back to you, Marco.
Frotscher, and now I have the honor and the pleasure to announce the speech of Mr. Alfredo Cotait, that is the president of Associação Comercial de São Paulo.
Good afternoon for everybody. Thank you very much for this seminar. Thank you for the Professor Dr. Gerrit Frotscher and the others who organized this seminar. I also want to tell about our Luiz Eduardo Chueri, responsible of the this area here in Trade Association, São Paulo Trade Association. I knew that more than 200 people participate in this seminar, virtual, of course. Maybe in the other time you can do this seminar presential. I think that we need to have more meetings about this financial and tax with Brazil and Germany, and of course with Brazil and other countries, because we need to learn more. And I think this panel, 7th panel, I think everyone teach us about main important issues. Then, of course, I have a little time here, all of you, but it's not my specialty. Maybe I need to learn more, and the other time I want to have one time to participate and maybe to learn each seminar more. I want to tell you that São Paulo Trade Association is at your disposal of everybody. And maybe when you are here in São Paulo, it will be a pleasure to receive all of you, professors and the other people who organized this seminar. Then, in name of São Paulo Trade Association, in name of our Luiz Eduardo Chueri, thank you very much for everybody. And my function now is to finish this seminar. It is an honor. Thank you very much.
So I thank very much, and we can close the work today. Thank you everybody that helped a lot in the organization of this seminar.